SALT, state and local tax deduction, whip count is for House Republicans. I think it's very clear that the hardest thing to get votes for is a debt limit increase, because there are dozens of members who have never voted for an enacted debt limit increase in the House Republican Conference, and they even have a couple remaining who didn't vote for their own messaging bill that was really, again, a messaging bill, a partisan proposal in 2023. It's very difficult to get conservatives on board with that. If you don't get them on board and get an almost unanimous vote among Republicans, then you have to start bipartisan negotiations with Democrats. You're going to have to get 60 votes in the Senate. Democrats see that as leverage over the tax agenda. So that's the hardest conversation happening now, and they haven't made a decision. And it'll be interesting to see how hard the president pushes them to take care of it for the long term, or even eliminate it, as he has said.
Jack Fitzpatrick with us live on Capitol Hill, where confirmation hearings are underway as well. Jack, I know you've got an eye on this. Marco Rubio is now the Secretary of State. Scott Bessent has cleared committee on his way to a vote to become the next Treasury Secretary. Senate Finance voted 16-11. What's going to happen on the floor?
It looks pretty good. He got a couple Democratic votes, including from Mark Warner of Virginia. Bessent has, at least in this case study, shown that he can pick up a couple Democrats and maintain support from Republicans. So he may not have as easy a path as Marco Rubio did, who got a 99-0 vote just yesterday. But Bessent isn't one of the toughest ones. You know, this is not a Pete Hegseth-like fight. So he looks to be in good shape among Republicans, and it's a good sign for some sign of bipartisanship to at least pick up a couple Democratic votes.
That was the first.
All right, Jack Fitzpatrick of Bloomberg Government live on Capitol Hill for us. Thank you so much. Jack just mentioning Pete Hegseth, the defense secretary nominee. NBC just reporting a few moments ago that senators today received an affidavit from the former sister-in-law of Hegseth, in which she says his behavior caused his second wife to fear for her safety. Now, Hegseth, of course, already cleared committee, but he has not gone for a full floor vote yet, and any incoming information, obviously, is something that senators have to consider.
Remembering the refrain from those critical of Pete Hegseth has been pretty consistent. No new information, no new revelations. This would count as such if it pans out to be true, something that we'll be following. We have a lot to follow up on. The late edition of Balance of Power, they'll be through that meeting at the White House, and Donald Trump may well be speaking in a news conference at that time.
Yep, with the massive infrastructure investment that reportedly is an AI infrastructure, a joint venture between SoftBank, Oracle, and OpenAI. So we'll have the very latest for you in the late edition of Balance of Power. In the meantime, Bloomberg Business Week is straight ahead right here on Bloomberg TV and radio.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good Tuesday afternoon, everybody. Welcome to Bloomberg Business Week, live on radio, TV, YouTube, Bloomberg Originals. I'm Carol Master along with Tim Stenivek. It is Tuesday, January 21st, and Tim, we've got an equity rally underway.
Yeah, we certainly do. Taking a look at the major indices, we're seeing a lot of green across the screen. The S&P 500 up 0.9%, the Dow up a full percentage point, and the NASDAQ up 0.7%. This is despite a couple of big laggards, Carol, including Tesla and Apple, that are dragging down the major indices. We're going to have more on that a little later in our program.
Yeah, that's what we call
That's a deep tease? Is that what it is? Okay, there,
it is
I did
indeed.
it.
Hey, listen, still ahead, we are going to talk a lot of news coming out of D.C., as you would expect. The first full day for President Trump and his administration, which is getting filled in as we get more news on confirmations and that process. But we will get a take on the president's mass pardon of those charged in the January 6th run on the U.S. Capitol from our reporter who was there. This as President Trump gets ready, Tim, to meet with the GOP leadership.
Also, what does cannabis look like under this next Trump administration? We've got Irwin Simon, the CEO of Tilray Brands, joining us to give us an idea of what we could expect and also what his historical context and how that plays into it.
All right, we'll also check on Trump's round of tariffs that may come our way and how that may sting U.S. stocks most this time around. And speaking of equities, investors focused on Netflix and the impact of Beyonce and Mike Tyson. They report after the closing bell. And then we're going to talk about the leadership revamp over at Goldman Sachs. So a lot coming on to you or coming your way in the next 60 minutes.
All right, we got a lot coming up. First up, though, a check of the day's trading top business stories. Here he is, Charlie Pellet.
Thank you very much. And here's what's going on. The Dow, the S&P, NASDAQ, and the Russell 2000 Index all advancing. The Russell 2000 Index, by far the outperformer, up now by 1.7%. To put that in context, we have got the S&P up by 0.8%. The Dow now up 453 points, up 1%. NASDAQ up 0.7%. The 10-year, 4.57%, with the 2-year, 4.27%. Gold surging $36 the ounce, up 1.3%. $27.44 on gold. Crude down 2.4%, $76.03 a barrel. And Bitcoin now up 4.2%. 106,800 on a Bitcoin. On an up day for the U.S. equity market, Apple is lower after getting a pair of analyst downgrades. Right now, Apple is down by 3.8%. And you mentioned Netflix. It is among the names reporting after the close of trading today. It will be the last earnings report where net new subscribers are not broken out as a metric. Netflix today up by just about 1.7%. So again, recapping, S&P up 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Masser along with Tim Stenivek. As we mentioned, it is the first full day of Donald Trump in the White House. We are expecting an announcement later on coming from Mr. Trump, specifically to announce OpenAI, SoftBank, Oracle, and an AI investment. This was initially reported by CBS News. We have seen Oracle shares jump on it. But again, this is why we are watching very much the first few days, the first few weeks, the first 100 days in terms of things that may come down that will impact the trade and also impact businesses. And that includes the tariff watch.
Yeah, things that may or may not come down. What's expected, what's not expected. The president signaled plans to impose previously threatened tariffs of as much as 25% on Mexico and Canada by February 1st, reiterating his contention that America's closest neighbors and largest trading partners, Carol, are letting undocumented migrants and drugs flood into the U.S.
All right, so what might all of this mean for U.S. companies? Bloomberg Intelligence Director of Equity Strategy and Chief Equity Strategist Gina Martin-Adams writes about that. She joins us from New Jersey. All right, Gina, so should investors be more concerned perhaps with this round of tariffs than compared to what we saw in the first Trump White House in terms of how it impacts specifically U.S. stocks?
Yeah, I think that's a really great question and something that we're going to have to grapple with probably most of this year, unfortunately, as the tariffs unfold. Right now, it's still relatively speculative, but the one thing we can hang our hat on is the fact that the dollar has been rallying since late September. In fits and starts, of course, but at its peak just a week or so ago, the dollar was up 10% from its low in late September. The dollar is a signal for portions of the U.S. market, especially the S&P 500's most multinational stocks, which tend to experience ripple effects of currency in their earnings outlook. Now, these happen to be also the stocks that were largely leading the S&P 500 earnings recovery in 2023 and 2024. They now face the most difficult comparisons and the highest earnings expectations going into 2025. So I would anticipate that at the very least, you have some currency concerns start to eat away a little bit at multinational stocks earnings outlook, which could create another bout of volatility or indigestion in stocks as those emerge.
Gina, we have sort of a playbook here in recent history. We saw what happened in the first Trump administration. We saw certain tariffs continue in the Biden administration. How were the stocks that were affected, the sectors that were affected, how were they hit, and how does that play into your analysis over at Bloomberg Intelligence?
Yeah, I think it's a great point. There is a precedent, but past is not necessarily a perfect precedent for what to expect, in that in 2018, the tariffs were pretty targeted at China. This time around, it looks like the tariffs could be considerably more widespread, wrapped up with, as you mentioned at the onset, in immigration issues, targeted at least in the short run at Mexico and Canada predominantly. China seems to be kind of put on the back burner, or at least temporarily on the back burner. Let's see where that goes over time. Nonetheless, there's one indicator that I think is really the most important for investors to follow regarding the potential market implications, and that is the operating margin forecast from analysts. This is one of the single best indicators of coming performance in the equity market. Operating margins obviously have been expanding for the better part of the last 2 years. In 2018, we saw operating margin forecasts turn over very quickly, not only because of tariffs, but also because the Fed was tightening interest rates, and we had some operating issues at the largest tech companies emerge. And so I think you want to watch this operating margin forecast pretty carefully. If analysts start to lose faith that companies can pass through prices onto their ultimate consumers, that they can maintain pricing power, that is usually pretty problematic for stocks going forward. We saw that in 2018. We may say that again now. Now, on the products and areas that could experience the greatest operating margin pressure, it could be quite different. But the important thing to know for the markets at large is that operating margins are the key.
Also fair to say, and I was thinking about a conversation Tim and I and David Gora had yesterday following the inauguration, and this was with Stefan Seelig. He was Undersecretary of Commerce for International Trade at Commerce during the Obama administration. He was also head of the International Trade Administration. And he said, when we talked about tariffs, he said, they're complicated. They are not all one thing. And as you made that distinction between 2018, when the tariffs were very targeted at China, versus maybe something here that's more like a blanket tariff, it does become a different issue. So we have to be smart about kind of the devil in the details.
We do. And I think the other thing to consider is that tariffs target at economies often impact markets through companies. And economies and markets are not the same thing. Companies are really a microcosm of economies, are certainly related to the economies, but the companies are the ones that oftentimes pay the tariffs. A good example is, these tariffs targeted at Canada. How much of that is actually going to impact U.S. auto manufacturers, who are some of the biggest exporters of product from Canada into the U.S., is a huge question. And I think we have to consider that companies are very multinational in nature. Many of the U.S. companies that are multinational will ultimately be the payers of these tariffs. So we want to be really careful and conscientious in not suggesting that tariffs that are targeted at economies are paid by those economies exclusively. They're generally paid by companies, and companies are often multinational in nature and can sit on various exchanges across the world, don't necessarily represent those economies.
Gina, in your analysis, does any of the transformation that the president is hoping actually happen? The idea that maybe because of tariffs, companies based here in the U.S. will manufacture goods closer to home in the U.S., employ more Americans, and make it work as the whole idea behind these being implemented is?
Well, I think there have to be a lot of other changes that happen to get U.S. companies to relocate into the United States beyond simply an acceleration in cost. Companies tend to find lowest cost labor around the world. They will not necessarily relocate to the US. They may relocate to other nations. They may find other ways to pass through costs. There are a lot of different avenues by which companies can flexibly approach a sanctions or a tariffs environment such as the one that we're likely to go into. I think you can see some relocations to the degree that's in the best interest of profitability of the company. But that profitability is most important for public companies to keep an eye on, obviously. And if it's not in the best interest of their shareholders, if it's not in the best interest of seeking profits, then why would they relocate to the United States? There has to be a pretty compelling reason beyond tariffs. One of the biggest reasons companies locate outside of the United States is it's just more efficient, more effective, and better for their cost structure. Will tariffs ultimately overwhelm that decision? It seems unlikely, given that labor is such a huge portion, ultimately, of company costs. But we'll see. You can also see efficiencies gained in other ways, by relocating into other regions of the world, particularly when we're selling into other regions of the world as a corporation. So I think it is very complicated. I think that a blunt instrument of tariffs can be effective in certain instances, particularly at protecting domestic industries. But it's not one big broad brush that we can paint, and I think that each company decision will be made on a profitability perspective of that independent company.
Hey, Gina, one thing I want to ask you, and one of the things that we've talked about over the last couple of years is some of the spending programs that Congress passed, that Biden initiated, that Congress ultimately passed and put investment dollars certainly into the U.S. economy, spending on infrastructure, green initiatives, and so on, right. Chips. Donald Trump is expected to announce an OpenAI, SoftBank, Oracle AI investment. We've been talking about this news out of CBS Reports. And I just wonder how you are thinking about or watching the Trump administration for other things that you think could potentially increase kind of the liquidity and cash that's out there to put to work that would impact the markets, the equity market as well.
Yeah, I think federal spending programs have become a really big bogey to watch for companies over the course of the last several years. The CHIPS Act was very consequential. The Inflation Reduction Act was also pretty consequential to certain industries' profitability trends. So any sort of fiscal spending package or public-private partnership dedicated to elevating investment into certain sectors can be very meaningful. I think we have to watch rather than speculate as to what may happen. I think we want to watch for the details of each of these packages to assess the viability and certainly the market impact. But nonetheless, we are in an era where federal spending and targeted federal spending is having real economic and market consequences.
Hey, speaking of market consequences, just 30 seconds real quickly. We've got Netflix after the earnings. We are in earnings season. This is a big one to watch. It's been on a tear the last couple of years, but it's down about 7% since early December. How might a name like Netflix kind of help or hurt sentiment in the markets, just quickly?
Yeah. It's a great question because Netflix is sort of one of those representative examples of the media segment within tech, telecom, and media. It's pretty important for driving sentiment with respect to content producers. I think that it's less important than, say, the Mag 7.
Yeah.
But we do want to watch for persistence of profitability. I think Netflix could give us some pretty good indications as to sustainability of spending, but also what's happening with margins. Margins are really key right now for that entire space. To the degree that this company is navigating the margin outlook relatively with a relative strength, I think that could be fairly supportive for the broad sector. But ultimately, we want to watch for the Mag 7, which are obviously have potentially profound impacts.
I feel like I'm going to make up T-shirts. Watch operating margins, because I feel like that's my big message from you right now overall.
It is the big message this year, 100%.
Great stuff. Thank you so much. Bloomberg Intelligence, Director of Equity Strategy. She is also the Chief Equity Strategist of our team there at BI. She's Gina Martin. So, Tim, that's really the big picture when it comes to tariffs and just the overall equity trade.
Well, now to our equity focus after the closing bell, and that, of course, is on Netflix. The streaming giant may have had a hard time topping its mammoth 2024, and yet Wall Street is certainly optimistic as Netflix gets ready to report after the closing bell today. With what to expect and what to watch out for, we welcome back with us Bloomberg News Equities reporter Ryan Vlastelica, joining us from our Chicago bureau. The stock, by the way, Ryan, 200% in the past 2 years, gained 83% last year alone, yet down about 7% since early December. What are the analysts saying about the most recent quarter?
Hey, good afternoon. Thanks for having me. So I'd say that the biggest focus for this quarter is any insight they give on the state of their ad business, which is still relatively small, but it's growing quickly, and it's what people expect to be the main growth driver for them going forward, especially since, they've done a great job signing up users here in the United States. Now, how can they improve monetization of those users? And ads are really the way they're going. And a big focus in particular that's sort of new for them is its focus on sports. So big sporting events like we've seen over the past quarter, those drove a lot of eyeballs, and that drives a lot of ad sales.
Yeah, it's all about monetization of, right, in the way of advertising dollars and those content spends, because after this quarter, right, we're not going to know subscriber numbers anymore.
That's right. They're going to stop disclosing that. People I talked to said, they wish they would still do that. But I think by now, the fact that they've just gained such a huge, massive user base across the world in the hundreds of millions of people, I don't think, adding a few, losing a few million is going to be really the needle mover that it was a couple of years ago. I think instead people are focused on, how are they improving their cash flow? How are they improving their profitability? How are they improving their revenue? How are they doing, improving the return on ad spend? All those kinds of factors are going to kind of take the place in terms of what used to be the focus on the user base.
From a content perspective, I'm old enough to remember when Netflix would never do sports, when Netflix would never do anything live. That was just a few years ago, and things have shifted quite a bit just in the past couple of years. Carol, I don't even watch boxing, and I watched the Tyson versus. I'd never seen boxing.
It's kind of event viewing, right?
And I was like, I'm going to watch this. I didn't watch it live. I think it was on too late.
Right.
But I watched it the next day, and I had no idea what happened. I stayed off of social media, and I actually watched it.
Well, I think there was so much announcement and news around it, right? Like it became an event, and we all wanted to be able to talk to about it. And I think about Ryan, we've moved away from that. It's not like we used to watch TV on a certain night. It's very different, and I guess that's a challenge for these streaming services when there's so much content out there. How do you grab somebody? And it sounds like sports, whether it's boxing or whether it's Beyonce doing some kind of concert. I mean, that's the kind of thing that brings people in, because those two events, right, just really drew in so many people.
Yeah, it's interesting how Netflix has sort of replicated the old pay-per-view model, and boxing was sort of the archetypical example of what that would be. Obviously, you want people watching at a certain time, must-see TV, and if it's not going to be scripted kind of content the way it was, maybe when we were younger, it is going to be things like sports, and that's something that continues to drive eyeballs, people who want to watch it as it's happening, and so that's become a new focus for them, really, these live events. It is sort of a shift at Netflix.
Netflix does something that other streamers don't do as well, and that is profitability. And I'm wondering how much longer this lead can last. They certainly had the early mover advantage, the first mover advantage. They were doing this before anyone else was doing it, and we've seen the way some of the peers have struggled in recent years. How long can Netflix continue to pull this off?
That's a great question. They do continue to spend a lot of money on content, and things like sports rights are very expensive. I think their deal with the NFL was $150 million, so that's obviously a lot of money for this, but they are so much bigger than anyone else in the market. I think I calculated that Netflix is 50% larger than Disney, Warner Brothers, and Paramount combined. So that obviously gives them a huge presence in the industry. It probably gives them the ability to make pretty aggressive bids on sports rights or whatever else it is. But certainly they've done a great job as far as proving profitability, especially when some of the other names in the space continue to struggle on that side of things.
All right, Bloomberg News equities reporter Ryan Vostelica will be watching for Netflix after the closing bell. I just looked at the Bloomberg, the analyst rankings. 43 buys, 17 holds, 4 sells, price high in terms of targets, $1,184 a share. The stock closing at $869 and change. I'm looking at the low. I mean, talk about a range. Morningstar's like $550 a share.
Okay. Well, T-minus what?
They have a sell, by the way.
Less than 2 hours until we get there.
Yeah, I mean, it's going to be interesting, right? We know it's about the content spend. They're still the big one, right, to beat.
They are. Oh, yeah. And also, like you said, like you were talking about with Gina, it certainly sets the tone for what we hear this earnings season, especially from the tech players.
All right, when we come back to D.C. and that big pardon that had to do with the January 6th riot. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are climbing as President Trump struck a better-than-feared tone on trade, and speculation grew that his policies will further boost corporate America. The S&P right now up 0.8%, up 46 points. The Dow up 1.1%, surging 460 points. NASDAQ up 0.6%, but the outperformer small cap shares with the Russell 2000 index up now by 1.7%. 10-year at 4.57%, the 2-year 4.27%. Gold surging $34 the ounce, up 1.3%. A retreat for West Texas Intermediate crude back below 76 a barrel, down 2.6%, 75.87. And Bitcoin at 106,450, up by 3.9%. Southwest Airlines is cutting 270 pilot positions across its Denver and Atlanta operations. The latest changes under broad efforts to reduce costs and maximize use of aircraft. And Air France says it will resume Paris-Tel Aviv flights effective January 25th. Again, recapping, stocks higher. S&P up 0.7%. For on-demand news 24 hours a day. Subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. This is Bloomberg Business Week. Carol Massar along with Tim Stanovic live on radio, TV, YouTube, and Bloomberg Originals. Well, last night, after the inauguration, after the Capital One Arena presidential parade and executive action signings, President Trump pardoned 1,500 people convicted in the January 6th Capitol riot, calling the hostages, his word, save for 14, who had their sentences commuted. It was a swift and immediate abandonment of the prosecution stemming from that day, and his clemency didn't exempt those convicted of assaulting police officers, as some Republicans had hoped. So we did want to head to Washington, D.C., check in with our Bloomberg News congressional reporter, Billy House, who was at the Capitol on January 6th. Billy, good to have you here with us. You know, on our planning call, Tim's like, we got to talk to Billy. We got to talk to Billy. We talked with him that day. Take us back to January 6th, 2021. You were at the Capitol.
I was at the Capitol early in the morning, so I saw kind of the insurrection sort of bubble up from what was a pretty, eventful morning to what, of course, became historical. What I saw that day were Capitol police officers just overrun, many of them heroically trying to battle back, as we all know, and many of them badly injured, and some of them, some believe, died as a result of some of their injuries. That's up for dispute, but a horrible day for sure.
Hey, Billy, as Carol mentioned, clemency from the president did not exempt those convicted of assaulting police officers, as some Republicans had hoped. When you were there on January 6, 2021, what was lawmakers' reaction at the time when they felt like, did they feel like they were under attack? Did they feel scared? Were they worried? Just remind everybody about the position that they were put in.
Lawmakers from both parties were definitely scared. I was locked in the House chamber with Republicans and Democrats as some of the rioters were busting the glass on the doors trying to get in. And, of course, a gunshot came from behind me in the speaker's gallery. And so there were lawmakers from both parties very worried, some crying. And afterward, many of them, almost all of them, posted notes on their doors of their offices thanking the Capitol Police and other law enforcement for their efforts that day to protect them.
Have we heard from any of those lawmakers today in the wake of these pardons and commutations? I'm curious if they've been outspoken at all, whether they agree or disagree with this.
That's a great question. And the first answer would be most of the House Republicans and some Senate Republicans are saying that they remain like brothers to Capitol Police, yet that Trump had the right to do this. I talked to one lawmaker from Pennsylvania who, one of these people who were pardoned, he said that person did his time, served his punishment, and now it's time to move on. But there are some exceptions. Tom Tillis of North Carolina says he disagrees with the president. So does Susan Collins and a couple others. In fact, this week, Tillis is going to introduce legislation to increase penalties on assaults on police officers. So that's kind of ironic that this is happening this week.
Yeah, it is interesting. And I am curious that, I wonder how this kind of carries over in terms of, how Republicans feel about like what it maybe means in terms of backing the president going forward. I mean, obviously the president can do what he needs to do or wants to do, but I do wonder how it makes perhaps some members of the Republican Party think differently. You know, the whispers in the Capitol, the conversations on the side of people who maybe, you know, had a level of respect, and maybe that level of respect isn't there as much anymore.
That's a great question, and you're right about the whispers. There is frank talk privately. Quite honestly, there's a lot less of that, including Tom Tillis is coming out today, you know, in opposition to these pardons is a real anomaly. You have a speaker who basically just nods his head next to the president whenever he says almost anything. And the rank and file of the House Republican Conference is pretty much in lockstep at this point. But there are wrinkles developing on spending issues and other things, and this is going to be probably another one. Again, the president is in his first full day as president again, but there will come a time when he's a lame duck, and you'll start to hear the chirping. I'm almost positive.
You know, what's interesting is I think about how sometimes there's comparisons to the Reagan administration, the Reagan Republicans. And I think back to then when Ronald Reagan and Tip O'Neill, like the friendship, the reaching across the aisle. And I just wonder, you know, you have seen different political cycles. Like, how do we get back to that? Or are we possibly going to see any signs of that as President Trump works on putting his agenda into effect?
That's a great question. And let me throw this at you. I think the most important vote in Congress for the presidential agenda could be Hakeem Jeffries, the leader of the House Democrats. This week or next week, the House majority is going to shrink for Republicans to 217 to 215. That means they can't lose a single vote to pass things. It'll be a tie. So to Democrats. So essentially, they are talking about lightning strike action on all kinds of things and a big package, including taxes. That lightning strike hasn't happened. And in recent weeks, we've seen more of a kind of a dumbstruck Republican attitude about how they're going to keep those promises with such a small majority. And almost inevitably, Hakeem Jeffries is going to have to help Mike Johnson get things passed.
Is that a position he's willing to serve in? Do Democrats and does Democratic leadership have the appetite to help Republicans during a time of such division?
Well, it'll depend on such things as a specific tax increases or continuations they want. Will go along with. But I will say this about Hakeem Jeffries. He's now taking to kind of snarkily joking. He did lose the majority. He didn't win it, but snarkily joking about this big, beautiful Republican majority of 2 seats.
All right, so we are anticipating, I think shortly, President Trump meeting with congressional leaders to talk about passing reconciliation bills, extending his signature tax cuts. Tell us a little bit about kind of the mood going into it, and is there going to be some horse trading? Like, I'm just curious what the mood is kind of heading into this.
Well, the big discussion point will be that Senate Majority Leader Thune will also be in that first. There's actually 2 meetings back to back at the White House. Thune and Johnson are meeting directly with the president. Thune kind of wants 2 big, huge bills. He thinks that's the easier way to address issues like the border, taxes, and that sort of thing. The House Republicans want to do it in 1 big, huge bill, and Trump is kind of like vacillated back and forth, like what's ever better for you guys. So that's one thing we're keeping an eye on. Right after that, Johnson and his top lieutenants will meet with Trump, and they'll talk about the internal fissures probably within the House and how to approach House Freedom Caucus worries about spending and that sort of thing.
Billy, we're also seeing reports and getting more information about Elon Musk's role in this White House. Where specifically he will be. I think what specifically he will be doing remains up in the air given his imperatives over at Doge. Do you see him working with lawmakers in the House? Has that happened? Is he building coalitions at this point? Because he will need their help if he wants to cut spending from their districts.
That's a great question. I think Elon Musk's relationship with House and Senate Republicans will be strong as long as his relationship with Trump is strong. Out of fear, more than anything, out of being his money going towards a primary against them is another thing. and really just who they fear more, Trump or Musk. And Trump's not going to allow, I do not believe, Musk to supersede him on any kind of pedestal like that.
Hey, Billy, how are you thinking about kind of the first Trump White House and Congress at that point, and then this go round? It feels like they're moving really quickly, and I understand that, even with that slim Republican majority, they know that the clock is ticking on getting things done before the midterms. But I am curious how you are, what's different this time around as you have to report it out, access to information. I'm just curious.
Well, I think two things right away. First of all, I recall that there were a lot of big promises right out of the chute the first time around. They were going to redo Obamacare. They failed on that famously. Trump was going to reduce government in some 19 different ways. None of those actually were put in place. But I will give him this. He's got a second time around. He knows what mistakes he's made before, what his team has made before, and perhaps he knows how to get around those this time.
All right. I do want to just finish. We have a couple more minutes. I want to go back to January 6th. I am curious, when you saw the pardon, and I know it was widely anticipated, it's been talked about for, I feel like, a few months, and even before that, if there was going to be a Trump win, and then after he won the November election. I don't know, what went through your head?
Yeah. I don't want to say I was disappointed. I'm trying to be objective here, but I know a lot of the Capitol Police. I've talked to them today. Many of them are very upset. They're not going to say so out loud, unless there's a group announcement. But they're wondering if they're just fodder for anybody that wants to attack the Capitol, and who's going to ultimately back them up. They had a lot of negative things said about their preparation that day, but they were definitely heroic that day, and they were heroic to a lot of us. And this seems to kind of dismiss all of that, and for whatever reason.
I think some people might say, wait a second, it's a surprise to hear that from a party, or the leader of a party that prides itself on a party of being, quote, a party of law and order, of one that talks about increasing safety in cities around the country. What do you make of that?
Well, I think you're absolutely correct. I mean, and that's what Tom Tillis, who, by the way, is up for re-election, or at least his seat is next year, speaking out about the pardons, saying that, and by the way, this comes when a week I'm going to introduce legislation to be tougher on those who attack police officers.
Do people feel safe at the Capitol?
They do. Namely, right now there's fencing, parameters of fencing, but there will always be a certain looking over your shoulder and that sort of thing, especially now. Yeah. Now that those who attack might be inspired that they won't be punished.
Sorry to hear that. Billy, always appreciative of time with you. We know it's busy, already a busy day up there at the Capitol, always is. Bloomberg News congressional reporter Billy House joining us from D.C. When we come back, we're going to get into the cannabis industry under a Trump White House. The CEO of Tilray Brands stopping by. That's coming up next. I'm Carol Master along with Tim Stanovic. This is Business Week.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks moving higher. The Dow, the S&P, NASDAQ all gaining. Stocks are climbing as President Trump strikes a better-than-feared tone on trade. Also, speculation is growing that his policies will further boost corporate America. S&P now up 45. That is a gain of 0.7%. The S&P now at 6,041. The Dow up 1%, up 434 points. NASDAQ is up 0.6%, while the Russell 2000 index of small-cap shares up now by 1.7%. The 10-year at 4.57%, with a 2-year 4.27%. Gold up $35 the ounce, up 1.3%, $27.43. And West Texas Intermediate crude down 2.6%, $75.89 for a barrel of WTI. Bitcoin now up 4% to 106,640 on Bitcoin. Goldman Sachs shares up 0.4%. Goldman is promoting a slate of star executives to run its biggest Wall Street business lines, spotlighting the firm's next generation of leadership. Again, recapping, stocks higher. S&P up 45, a gain of 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the $32 billion cannabis industry in the United States is watching perhaps what a Trump administration and Republican Congress may mean for their world. Bloomberg Intelligence Nathan Dean writing last month that, quote, while legislation to let U.S. banks service cannabis-based businesses will face similar policy hurdles in 2025 as in the past, Donald Trump's election victory raised the odds that a long-awaited goal of the cannabis sector can make it to the president's desk this year. Let's see what Irwin Simon has to say. He's chairman, president, and CEO of the $1.1 billion market cap cannabis company Tilray Brands. He joins us from New York City. Tilray, by the way, is one of the world's largest licensed cannabis companies. Irwin, nice to have you back here on Bloomberg. We are curious about your thoughts regarding the Trump administration and their stance, his stance toward federal legalization of marijuana. What do you think the outlook is?
So, number one, thank you very much for having me. Listen, it was great to see President Trump, inauguration yesterday and ultimately see him come back to office. Trump is about business. You hear him talk about tariffs. You hear him talk about, free trade. And if you come back and look at cannabis and the opportunities there to legalize that and the excise tax that can be brought into the U.S. coffers, I think he looks at it as a business. And I think, as I said before, I think medical cannabis in the U.S. legalizes, and that enacts Safe Bank, ultimately from a decriminalization, and that takes the illicit market off the street. And I think absolutely Trump will absolutely look at that. And I think, he has already looked at that. When it came to the election in November, he was in favor of cannabis, legalizing from a recreational standpoint in Florida. It didn't pass because it's needed 60%, and I think it was around 53, 54%.
Why are you optimistic that he'll do this stuff during this term when during his first term there was a lot of optimism and a lot of hope from folks in the cannabis industry? I know you weren't at Tilray at that time, but there was a lot of optimism coming from the industry, and that ultimately did not come to pass.
So, listen, again, I think from a business standpoint, and he looks at it from two things. He looks at it from the tax dollars and the excise tax that come into place, and he looks at an illicit market that he takes off the street, and he gets real regulation in here, and he ultimately brings safe banking in here, which allows money that's going through the banks from a regulatory standpoint. Listen, you come back and look at Canada today, and Canada's a tenth of the size of the U.S., and there's over $1.5 billion in excise tax that comes into Canada each year. If you multiply that by 10, you look at the $15 billion opportunity here in the U.S. So I come back and absolutely, if you look at Europe today, there's 20 different countries that allow medical cannabis in Europe today. And come back and look at recreational cannabis. Recreational cannabis today is legal in 27 states in the U.S., and medical cannabis is in 35 states. So a big part of the U.S. population wants cannabis legalized. But I'll tell you this here, Tilray is in a good spot. We can't sell cannabis in the U.S. because we're a NASDAQ-listed company. We're the largest cannabis company in Canada today. We have a good-sized beverage business in the U.S. today with our our craft beers, our spirits with Breckenridge, and our hemp business with Manitoba Harvest. We also have a good-sized business in Europe today with our medical cannabis business, where there we only can sell cannabis through prescriptions from doctors. So we're a well-diversified company. And I got to tell you, it would be very helpful to Tilray if cannabis did legalize in the U.S. from a medical standpoint. And I think, hey, it's a $200-300 million business for us right away at a 3% size of the market. As you just said, you know, it's a $10 billion market here in the U.S. from a medical standpoint.
What about tariffs and the comments that the president has made about Canada? The possibility that there could be 25% tariffs on goods coming from Canada by February 1st, and also the jokes that he made over the last month about essentially Canada becoming the 51st state. How do you look at all that?
Well, I don't think that's going to happen, number one. But number two, I think he got Canada's attention. You know, the good news is, you know, the only thing we bring in from Canada today is we bring some hemp in for our hemp business. You know, none of our beer, and of course, none of our cannabis does sell within, you know, the U.S. None of the cannabis we make today or grow in Canada is sold in the U.S. Listen, the Canadian dollar, you know, has quite a bit of value. So if there was a tariff, I think ultimately it gets passed on to the consumer. I don't think it's going to be 25%. I think there could be tariffs, but we have 5 million square feet of grow in Canada today. And if we could produce there, which would be about 60 metric tons, and be able to sell it in the U.S., it would be very, very beneficial to Tilray.
Where's the growth in your business, right? There's cannabis, there's the beverage business. You guys are also moving increasingly into vape and infused pre-roll categories. So tell us a little bit about where the biggest opportunities are for you.
So the growth in Canada today is in pre-rolls. The growth in Canada today is cannabis-infused drinks and the vape business. And that's where the growth is in Canada today. And as the market continues to mature and more consumers are buying, you know, from the legalized market, not buying the illicit market, and being one of the largest, you know, growers today in Canada, that's a big opportunity for the Canadian market. But, you know, Canada's 40 million people in size, and ultimately the market's going to continue to mature. In the U.S., we're the 5th largest craft brewer in the U.S. today. And we became a beverage company. So big opportunities if we come out with a drink called Liquid Love, our non-alc drinks, our energy drinks. So the beverage business for us, big opportunity for us. And listen, as people walk around, they always have something in their hand, whether it's a coffee, whether it's a drink, whether it's a water. And listen, beer business is not going away. And ultimately, the beverage business is one of the biggest categories out there. And today, we have 10 breweries out there. We have 700 distributors. We have an infrastructure of sales and marketing people. In Europe, medical cannabis, big opportunity for us as doctors are prescribing cannabis today as medicines for pain, for anxiety, for sleep, etc. So we're really in some good businesses. We're a 5-year-old company as I put this together. We're investing in these business. We're investing in these brands. We have over 40 brands today with, you know, 3 diversified business. So I like the cannabis business. I love the beverage business. And the wellness business is another big opportunity for us.
Irwin, though, your beverage portfolio, you guys have done some streamlining. And, you know, the recently announced portfolio rationalization of beer brands in the U.S. is really kind of consistent across the overall slowdown that we've seen with other alcoholic producers. Tim and I talk about it all the time with folks in the alcohol industry. Is cannabis use among young adults at the expense of alcohol the reason why?
So number one is, you know, we've done multiple acquisitions within the beer business in the U.S. We bought, you know, 8 businesses from Anheuser-Busch. We just bought 4 from Molson's. We bought Montauk Brewery. We bought Sweetwater. With that, we're doing a couple of things. We're doing a SKU rationalization as we had way too many SKUs out there. We're coming up with a lot of new innovation. We have over 140 new products. And the other thing what we're doing is they're skewing our brands to such regional brands. And before we were selling them in multi-states. Now we're only going to sell it in 2 or 3 different states. But Shock Top will become, you know, a national brand for us, and Sweetwater will be sold in with half the U.S. So that's one of the big reasons. And the other thing is we bring all these businesses together. Taking out costs is taking out slower selling SKUs.
So yes or no, it's not because young adults are doing more cannabis versus drinking?
So I think young adults absolutely are doing more cannabis, and absolutely that is, you know, a rationalization, and that is affecting the drinking business.
All
absolutely.
Right. Great to get some time with you. Irwin Simon, he's CEO of Tilray Brands. This is Business Week.
This is Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, it's time for the most read story on the Bloomberg terminal today. And I feel like 'tis the season, it seems, for news out of the big Wall Street banks when it comes to changes in their executive ranks. We've had announcements along those lines from JP Morgan, Morgan Stanley since the start of the new year. And Tim, now we are hearing from Goldman Sachs.
With the rundown on that, we turn to Todd Gillespie, Bloomberg News U.S. finance reporter. He joins us here in the Bloomberg Business Week studio. Some news out this morning from Goldman Sachs. Todd, thanks to you and Sri Natarajan. What are the changes and promotions that Goldman made?
Well, Tim, basically what they're doing is introducing another layer of management, right? At a traditionally very, sharp, streamlined bank, one of the most prestigious places to work on Wall Street. What they're making sure is that the new generation of talent is getting recognized. They're adding 3 new heads of their equities business, 3 heads of their banking units. They're also promoting a record number of people really to their management committee. That's another 15 people to a 24-person management committee. So this management committee is now going to have 39 people on. It goes from 24 to 39.
Wait. All right. Interpretation is this, please, people do not go anywhere?
Well, right, Carl, that's a big part of this, right? What we've seen just last week is an $80 million retention bonus handed out to John Waldron, the president and COO, who's, many people expect will be next in line to be CEO in about 5 years or so, maybe when David Solomon finally agrees to move on after, having already served 6 years as CEO of Goldman Sachs. But there is, you're right, this whole other level of rising stars, top talent, prime poaching material for the Carlyles, the Apollos of this world, alternative asset managers across Wall Street who are ready to pay the big bucks to hire the top bankers in. And Goldman knows that it doesn't want to let these people go, and it needs to give them a path forward at this firm.
It's kind of so interesting because I always felt like in terms of Wall Street for so many years, for such a long time, that it was everybody wanted to be at Goldman. Like that was the pinnacle. And yet now you have all these massive private equity and money management firms where people are like, well, wait a minute. If you're, kind of looking for new opportunities or to make a ton of money, maybe that's the next step.
Totally. And I mean, Goldman is still an obviously extremely prestigious place to work. Don't get us wrong on this. And at Goldman in particular, we're seeing this bank act more and more like an alternative management arm as well, right? GSAM, the Goldman Sachs asset management business, is doing a lot more in the private equity space, private credit. It's building out, it's competing with the same kinds of companies that are its clients when it comes to the public equity side or the investment banking side, right? So, you're seeing this firm adapt.
Right.
And it's always, Goldman is often one step ahead of the curve here. They know what they need to do. They're thinking forward. They're thinking ahead. They can also pay the big bucks. They're also getting, they reported, they doubled their fourth quarter profit when they announced results just last week. So, this is still a deep-pocketed institution. It just needs to think smart and think fast right now.
So who are some of these folks who Goldman tapped?
Yeah, well, I mean, a lot of these names are well known to people inside the bank. They're not often, they're not, high-profile names. They're not household names. You're right. But a lot of these people are like super smart, top traders, people who've been on the radars for years. Many of these people have been at Goldman since the beginning of their career. From one point certainly to make is that there is real dearth of diversity here. There is one woman among the new 9 business heads that have been announced today. That's Kim Posnet, who's an up-and-coming... I shouldn't say up-and-coming. Yeah, one woman. I mean, I shouldn't say up-and-coming. She's a very well-established top TMT banker, globally speaking here. They've also added two of the 15 names who are added to the management committee. Along with Kim, there are 2 other women. One is the Chief Administrative Officer for Asia Pacific, and the other is the head of internal audit at the bank. So, but these aren't revenue-generating front office roles that they're doing. So they're clearly, the bank is clearly aware about what this looks like.
And my understanding from your reporting, Todd, is that they've been thinking about this for over a year. So this has been in the works for a while here.
This has certainly been in the works for a while, Kyle. Yeah, I mean, this is a problem that Goldman is grappling with and has been grappling with for a long time. David Solomon, people thought he might be pushed out the door just a couple of years ago after, embarrassing missteps over the retail expansion at Goldman Sachs. They're now trying to shift that off. They're trying to sell off this, Marcus retail arm, their partnership with Apple Cards. JP Morgan, Barclays have been reported to be circling that business now. They're looking to shed that. But now Goldman has shown that it can return to its core roots. It can really double down and has done very, very well by re-emphasizing those businesses. And Goldman now is still thinking to the future, while it's maintaining David Solomon very comfortably in his seat, but it still needs to think carefully about keeping this top talent at the firm.
How comfortable is he in that seat in the sense of how long do you think he'll be at the bank? Because you also note that Waldron is likely the successor to Solomon.
Yeah, well, so last week there were these $80 million retention bonuses that were handed out to Solomon and to Waldron, which keeps them in their seats until at least January 2030. So that's another 5 years we're talking for these guys at the top of the bank. You know, all they have to do is just stay there. There aren't even performance-related targets attached to this 80 million figure. You know, if
kick back,
right,
put your feet up on the desk.
Totally, yeah. I mean, if Bloomberg could pay me $80 million to just stay here and twiddle my thumbs in the corner for a while, obviously these gentlemen won't be twiddling their thumbs. They'll be working very, very hard. But it's certainly a sign of how much Goldman values this top talent, these top executives, and also a sign now today of how much it needs to still, keep being an attractive place for its up-and-coming talent to be as well.
Listen, we talk about this with all the big Wall Street firms, which, have leaders that are so kind of tied to the firms, so identified with the firms, but they need to build out their bench. And that's exactly what they're doing, is kind of these insurance policies. Great stuff. Todd Gillespie, thank you so much. All right, that's going to do it for this hour of Business Week. For those watching on TV, the close is coming your way. Tim and I continuing on Bloomberg Radio.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Michael Wallace. Much of the Deep South is a winter wonderland. Some areas from South Texas to the Carolinas could get 8 inches of snow. In Clinton, Alabama, Regina Rust is glad she went shopping ahead of the storm.
We're about to make some soup, and that's probably going to last through all of this that's coming. Just something to prepare to keep my husband warm, me warm, and anybody else needs some soup.
CBS News meteorologist David Parkinson says much of the country is in a deep freeze.
You will be seeing temperatures not even cracking the 20-degree mark in Philadelphia and in New York, maybe even in the nation's capital. And then down to the south, we could be staying below the freezing mark in Atlanta, even down into a place like Jacksonville.
Jacksonville's airport plans to close this evening. Houston's Intercontinental and Hobby airports will close at midnight. Thousands of flights have been delayed or canceled. Many roads across the South are closed. More Capitol riot defendants are being released today following President Trump's pardons and commutations. CBS's Nicole Skanga has more.
As for the future releases, they're ongoing, and we expect even more today. Trump ordered his attorney general, currently acting attorney general, to make sure that those who are currently held in prison are, quote, released immediately. And also, by the way, to dismiss all of those pending indictments, too. 18
Democratic state attorneys general have filed a lawsuit to block Trump's executive order that would end constitutionally guaranteed birthright citizenship. Here's California AG Rob Bonta.
I am deeply disappointed that we're here one day into the new administration, and also not at all surprised.
The government has long interpreted the 14th Amendment to mean those born on American soil are citizens at birth. At least 76 people were killed in a fire at a ski resort in Turkey. CBS's Vicky Barker reports the fire broke out at 3 a.m. when most guests were sleeping.
As firefighters battle the blaze, orange flames leap from windows and stairwells in the 11-story hotel. Bed sheets dangle from some of the windows. Frantic guests use them to escape the fire.
President Trump wants to pull the U.S. out of the World Health Organization. The WHO's Tariq Yasharovich hopes Trump will reconsider.
WHO plays a crucial role in protecting the health and security of the world's people, including Americans, by addressing the root causes of disease and detecting, preventing, and responding to health emergencies.
The U.S. is the World Health Organization's largest donor, accounting for 18% of its budget. Stocks are higher, Dow up 456. This is CBS News.
TradeMasters.com.
There's controversy over a likely Oscar contender.
Welcome to America.
The Brutalist director Brady Corbett and star Adrian Brody are under fire after the film's editor revealed they used AI to enhance Brody's accent in one scene.
There was a war on, and yet many of the sides of my projects had survived.
Corbett insists Brody's performance and his co-star Felicity Jones were completely their own. The editor, who is Hungarian, explained to Red Shark News it's one of the most difficult languages to learn to pronounce, and thanks to AI, not even locals will spot any difference in the movie. Deborah Rodriguez, CBS News.
The Baseball Hall of Fame will announce its class of 2025 later today. Ichiro Suzuki should be a slam dunk in his first time on the ballot. He and his 3,000-plus career hits may even be voted in unanimously. CC Sabathia, Andrew Jones, and Billy Wagner could get in as well. Michael Wallace, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody, this is Bloomberg Business Week on this Tuesday, January 21st. We're just about 55 minutes away from the closing bell. We've got a rally underway. We're just coming off our highs of the session. If I look at the S&P 500, nearly 400 names are gaining today, basically 4 up for every one that is losing ground. So definitely more of a risk-on trade.
Well, one of those that is losing ground right now is Apple, down 3.9%. Just getting walloped today. A rare day, a pair of downgrades. Mark Gurman is going to join us in the next few minutes to give us an idea of what's going on and if there's any deja vu from what happened last January with all those analyst notes.
All right, we're going to talk about that in just a moment. Also, speaking of kind of those big cap companies that we keep a watch on, Netflix reporting earnings after the bell. We're going to bring you those instant numbers, analysis, market reaction. We'll get into that a little bit later on.
And Inspire, it's a new book about leadership. It's out today, The Universal Path for Leading Yourself and Others by Adam Galinsky over at Columbia Business School. Kind of the perfect timing, Carol, given the presidential transition that we saw this week.
Got a list of leaders that I want to run by him and see what he thinks about them.
All right, sharpen the pencil.
Send us names. We'll take them in. First up, let's get a check on today's trading day and some of your top business stories. Let's bring in Charlie Pellett.
All right, thank you very much. Here we are, final hour of trading on the first day of the Trump administration. Stocks higher across the board. S&P right now up by about 0.8%, a gain of 46 points, 6,043. The Dow up 456. That is an advance of 1%. NASDAQ up 120 now, higher by 0.6%. The 10-year at 4.56% with a 2-year at 4.27%. Gold up 1.2%. Spot gold 27.41 the ounce. West Texas Intermediate crude down 2.6%. 75.89 a barrel. And Bitcoin now up 4.5%. Bitcoin back above 107,000. Bitcoin now at 107,109. Stocks are climbing as President Trump struck a better-than-feared tone on trade. Also, speculation is growing that his policies will further boost corporate America. In the meantime, the president has signaled plans to impose previously threatened tariffs of as much as 25% on Mexico and Canada by February 1st. Our Mark Gurman is reporting that Meta Platforms is working on upgrades to its popular smart glasses and is exploring new wearable devices such as watches and camera-equipped earbuds. Again, recapping, stocks higher with the Russell 2000 index of small cap shares the standout. Russell 2000 up 1.6%. S&P up 47, up by 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellett, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellett. I said we were going to start with Apple, but that was before I learned about this Bloomberg news story from our next guest, Mark Gurman, Bloomberg News Chief Technology Correspondent, joining us from our San Francisco bureau. That's exactly where I want to start off, Mark. We'll get to Apple in just a minute, but you've got this story out about Meta working on upgrades to its smart glasses, exploring new wearable devices. We're talking watches, camera-equipped earbuds, looking to embed AI into more of its products. What did you learn?
Yeah, so Meta, that's the hot story this morning. Obviously, they've got their hardware division, Reality Labs, and they're cooking up a lot of stuff. They're cooking up some ideas that Apple has tried and Apple's been working on, and they're also cooking up some new ideas to take their smart glasses business to new heights. So let me start with this here. So right now you have Ray-Ban Meta glasses, right? Those don't have AR displays, but they have cameras, microphones. You can take calls, control music, do all sorts of stuff with them using Meta AI. Those are getting a big upgrade this year, right? They're going to launch a new version that uses Oakley glasses, right? This is meant for bikers, meant for athletes and such, so a little bit of a higher end pair. Then they're going to launch a super top end pair that's probably going to cost around $1,000. This is going to have a display in the right lens. It's not an AR display, but just a display so you can run some light applications, see photos that you took, get notifications. It's going to be pretty nifty. They're testing using wrist-based control. That's the same control mechanism that they've used for their AR glasses prototype, Orion. Looking ahead, Orion, that's the big AR glasses splash they made last fall. That's actually never going to launch as a consumer product. Instead, they're going to start trying to sell it to developers next year in 2026 as a testing ground to develop applications for it. A year later, they'll launch a follow-up, the first one aimed at consumers with AR functionality. That's called Artemis. That's a more modernized version, some display trade-offs, better hardware, better software, more modern. The other things they're looking at, and this comes back to the Apple portion, is, again, launching a smartwatch. They've considered it for about half a decade, maybe even longer than that. They're working on it again, talking about launching it sometime this year or next year. And then lastly, they're exploring earbuds. These would be AirPods competitors, in-house headphones from Meta, and they would include cameras. And you'd basically be able to look around and use AI to understand the surrounding environment. So the functionality would be very similar to what you're getting from the Ray-Bans right now or the other Meta smart glasses, but they would be in a more familiar form factor, right? There's some people who don't want to wear glasses, and so the alternative to get those same AI features would be tucking in those technologies and cameras and other elements into the earbuds. It's interesting because this is a type of product that both Apple and Samsung are exploring as well. So it seems like all the tech companies are looking how they can really beef up the earbuds businesses.
Mark, it feels like a really big step by Meta even further into hardware. Why are they doing it?
Yeah, for Meta, all in on AI right now. And the best expression of AI is how it's integrated into hardware products. Obviously, if you're not the device maker, you're not going to be able to integrate AI. You see that Apple has its own AI tucked into its devices. Google has its own AI in its devices. Samsung has its own AI in its devices. So for Meta really to be able to be a leader in artificial intelligence, they're going to need to push it not only to their applications on various platforms, but build their own platforms to run it on. And obviously glasses and different wearables like earbuds and smartwatches, those are the ultimate expressions of AI in making that technology actually useful. So I would say at this point, based on what we've seen publicly, it's fair to say that Meta is the leader in AI wearables and AI devices, right? In terms of next generation types of platforms, things beyond the smartphone. We'll have to see if Google and Apple and Samsung and others will catch up in the coming years. I do expect them to, at least on the hardware side, in Apple's case, maybe not on the AI side. But for now, they have a first mover advantage.
Mark, you try all this stuff out when it does come out, not when it's being worked on. What have you tried from Meta platforms, and how has it been? Because I haven't actually tried these smart glasses yet.
Yeah, I've been wearing the Meta smart glasses actually recently. I love the form factor. The phone call quality is great. It's basically, AirPods in a glasses form factor. And you really get no benefit for that, right? Unless you have lenses that take advantage of the surrounding environment by using augmented reality. There's really no advantage to having that form factor. I guess the only thing you could say is usability, right? Getting that full temple area to do gestures, but Apple's done a pretty good job on the small space allocated on the the miniature size of the AirPods. The other thing is battery life, but those things will be overcome. So until you get these AR displays into these smart glasses, they're really no more useful from a technology standpoint in comparison to earbuds with cameras. But of course, we're still waiting for that evolution to happen. So I think at some point you'll see smart glasses without displays morph into these earbuds with cameras, and the smart glasses market is going to become this AR devices market, but that's going to take a while.
Okay, perfect segue to move on to another big tech name. Shares of Meta Platforms, by the way, higher by about 0.7%. Apple shares down 3.8%. They were down as much as 4.6%, weighing on the S&P 500 and the NASDAQ. iPhone sales fell 18.2% in China, according to Counterpoint Research. That was during the December quarter. The company also getting this pair of analyst downgrades. Mark, it makes me think of what happened a year ago. We'd be talking to you throughout the month of January. Apple getting 2 downgrades in the first week of 2024. There was news of a discount on the iPhone 15 in China. Everybody was freaking out about iPhones. Then Apple closes out the year higher by 35%. What's going on here?
Yeah, every year, I think for the last 5-6 years, I think since around late 2018, early 2019, there have been concerns about iPhone performance in China, particularly in the holiday quarter. You know, the China iPhone 16 launch misses out completely on Apple Intelligence and artificial intelligence. I don't think Apple Intelligence is. I don't think it's even fair to talk about it in the same breath as what you're seeing from Meta AI and Google AI and some of the features you're going to see from Samsung later this week on their S25 line. But still, it's a marketing point. It's important for consumers to know that AI for Apple is there too, and they've completely missed the boat on China, and I think that's dragged down iPhone sales there a little bit, combined with the fact that there's no new design or major new features in the iPhone 16 hardware. Later this year, they're going to come out with an Air version of the iPhone 17, and from everything I've heard, that's probably not going to have a physical SIM card slot. That's something that you need to use most carriers and most plans in China, so the sales of that device probably won't be as strong as they would have liked in China. But once they come out with a new design phone, I think some things will start to slightly turn around. But certainly the tide is continuing to shift for Apple and China in the wrong direction.
Yeah, that's what I was going to ask you. Like, if they miss, you know, they have a quarter, or there's, you know, a product cycle, a quarter or two, you know, does that just kind of build on itself to the downside? I'm just curious, you know, or if consumers in China get excited, do they come back to Apple?
Yeah, I don't think Apple's ever going to disappear. The Chinese market loves these luxury items, these luxury goods. And, you know, Apple's going to keep coming out with more expensive devices and higher-end devices. I certainly think once Apple is able to bring a foldable to market, I think that's going to do extraordinarily well in China if they can get the SIM card and the eSIM situation worked out there, because China is very prominently using physical SIM cards. And when you move to these foldable devices, it's more of a digital SIM system because of the smaller space. But I'm sure they have plans to figure that out. But once Apple gets into foldables, I think that'll be slightly helpful there.
Okay, Mark, we've saved the last minute and a half to talk about Sonos because your Power On column over the weekend talked about the question, would Apple buy Sonos? Is Sonos
No,
even...
they won't.
Okay. you wrote a whole column about it, and the answer is just no?
Yeah, I don't. Well, the column said that Apple's not going to buy them, right? I don't see any benefit, certainly on the software side. Apple's not going to buy them. The software is the whole reason the CEO was just fired, right? On the hardware side, much of it is commoditized, and Apple has the chops internally to do speakers if they wanted to. So you're not really buying anything but a relatively small user base. So this is a better fit for a company like Spotify or Amazon.
Mark, I'm part of that small user base, and our Sonos system at home is basically bricked. It's kind of unbelievable. We had this great system. It just doesn't work anymore. Is Tom Conrad going to fix this, or am I just out of luck?
He's going to fix it enough, in my opinion, to make Sonos an interesting acquisition target. And I think at its sub $2 billion market cap, which is in 1/4000th of what Apple's probably going to be worth, in, you know, about for the end of the year, right? I think they're extremely attractive. We'll have to see what the new Justice Department is going to allow in terms of acquisitions, but it would fit quite nicely into Amazon, and it would also fit quite nicely into a company like Spotify that's tried and failed to develop its own hardware in the past.
I just want speakers that work, Carol.
He just wants it to work.
I'm using my phone now.
He complains about it a lot, Mark. I'm just going to tell you.
Yeah, I'm not the only one.
All right, Mark Gurman, thank you so much. Bloomberg News Chief Technology Correspondent. Be sure to check out his weekly column and his Power On newsletter. You are listening and watching Bloomberg Business Week. Coming up, I should say, our plugged-in weekly look at EVs. That's next.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks higher across the board. 39 minutes to go until the closing bell. S&P right now up 49. That is a gain of 0.8%. Donald Trump striking a better-than-feared tone on trade and speculation is growing that his policies will further boost corporate America, with the Dow now up 486, up 1.1%. NASDAQ higher by 124 points, up by 0.6%. The Russell 2000 index of small cap shares, the outperformer, that index now surging by 1.7%. 10-year at 4.56%, with a 2-year 4.27%. Gold up $32 the ounce, up 1.2%, 27.41. West Texas Intermediate crude just below 76 at 75.89, down 2.6%. And Bitcoin now at 106,960. Bitcoin up by 4.4%. The big event after the close of trading, earnings out of Netflix. The stock now up by 1%. Media analyst Geeta Raghunathan of Bloomberg Intelligence says this report is going to be unique.
This is important because this is the last time that Netflix will be reporting subscriber numbers in its history. So 4Q is the last time. After this, we're going to have to find a whole new set of numbers to focus on. But yes, and subscriber numbers, which we think will be well into, above the 10 million mark. For Netflix for the fourth quarter. And then just going ahead into 2025. Remember, we are heading into one of their strongest content slates ever.
Bloomberg's Geeta Raghunathan. Again, Netflix shares are up by 1.1% ahead of earnings. Recapping, S&P up 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. It is time for another edition of Bloomberg Plugged In. It's your weekly look at EVs. And this week, our focus is on an industry that barely existed 10 years ago, but it's become essential to keeping the lights on in California, Texas, and other states. And now, Carol, it's spreading around the world.
It is indeed. We're talking about large-scale energy storage. It is having a moment thanks to plunging battery prices, rising electricity demand, and a recognition among operators, utilities, and public officials that grids are less reliable, Tim, than they once were.
David R. Baker is a Bloomberg News energy reporter. He writes for Bloomberg Business Week about the giant batteries from Tesla and Volta that are shoring up the electrical grid. He joins us from our San Francisco bureau. When we talk about energy, oftentimes we're talking about the energy demand from companies that are the hyperscalers, that are doing stuff with AI. Talk to us about what's going on in these huge buildings that are housed with batteries.
A lot of these actually aren't in buildings. They're out in the open air, but you just wouldn't ever notice them unless you stopped and took a look, because they really don't look like much of anything. These facilities, the batteries themselves, often just look like big metal containers or compartments that you might see sitting at an electricity substation or outside of a power plant. You'll increasingly see them next to wind farms or solar power plants, but they really don't advertise exactly what they are. But they are essentially just very large versions of the same batteries that we have inside of cars, inside of computers, inside of all kinds of devices these days. And they're turning out to be extremely useful.
Are they a single battery, or is it batteries stacked on top of one another?
It will usually be, for any of these commercially available units, you'll have multiple batteries housed inside of one packet. It depends on which product you're buying. But yeah, there will be lots of cells packed inside each of these cabinets. It's not just one big cell.
So is this to kind of help out the grids that we always talk about around the country, David, that are strained, that are old, that need updates? Is that what this is about?
Yeah, essentially batteries can do a couple of things for you if you're an electric utility, and they're very useful things. They can soak up excess renewable power if you've got a lot of solar generation in the middle of the day, or wind power that gets generated at a certain time of day that you may not necessarily need it. These batteries can soak it up and then deliver it to the grid when you do need it, usually in like 4 to 5 hour bursts. But they can also do other things too. They can regulate the flow of electricity over the grids and make things smoother and more stable. And when you have a heat wave coming that you know is coming, and you know you're going to be in a high demand period, you can get these batteries ready to just jump in when they are needed. And they're quite good at helping prevent blackouts because they will just switch on, deliver the amount of power that you expect, and then shut off when you need them to shut off. So yes, they've turned out to be quite useful.
Are these batteries operated by the grid, or are they operated by separate companies that then contract with grids or utility operators?
You'll typically see them operated by one company, but selling their power to another, so selling their power to a utility, something like that. There's developed this entire ecosystem around these batteries where you have companies that will deploy them, will install them, others will install and own and run them, others will do it on a turnkey kind of basis where they do it all for customers and then hand it over at the end. So a lot of different business models.
Hey, David, how does this contrast with how utilities kind of used to add to the power supply or to the grid when they needed it?
Well, it used to be that essentially you had one option. You had to build a new power plant, and you had different kinds of generation that you could use. You could have like a power plant burning natural gas, or you could do a solar power plant or something like that. But essentially you had to add more generation onto the grid. We still need to do that. We still need to do a lot of that. But this now gives another option for some things that is actually pretty fast to deploy. You can get one of these things up and running from basically nothing to functional in about a year. And you can't say that for other kinds of power generation out there.
I feel like it solves a problem that I just remember conversations years ago when solar came on the scene in particular, that they're like, yeah, that's great. But when the sun goes down, like you can't, save it or conserve this or store, the energy that was created by solar. It sounds like we've solved that problem in a big way.
I wouldn't say it's exactly solved, but this goes a long way toward that. What California and Texas have been doing with these batteries, especially during the heat waves, they are soaking up power that would otherwise go wasted in the middle of the day from a lot of solar power plants and getting it ready to use after sundown. You are time shifting a bunch of that solar power into the evening after sunset. And you can do it for 4 or 5 hours at a time, which is about what you need.
I'm curious about geographically who has control of these batteries, what countries are building them up, where we're going to start seeing more and more growth. Your piece gets into that a little bit.
Still, most battery cells are coming out of China and Southeast Asia. And the Biden administration put a real effort and a lot of money into trying to get more of that done here in the U.S. That is still sort of a work in progress, and we have to see exactly what the Trump administration wants to do with all of that. But up until now, the big powerhouse out there for batteries is Asia.
Hey, one thing I want to ask you, or a couple more questions, is what are the limits of these batteries? And I'm thinking about secondly, Tim and I talk so much about the demand for AI, and then the other aspect of that is, well, how do we power it? So does that help solve some of the problems or questions around finding the energy necessary to power all of the AI computing?
So there are a couple of limits here. Most of these batteries are designed to function for about 4 to 5 hours. There are companies out there with new battery technologies that can last much longer, and they are just starting to get out into the marketplace. But most of these have a limited time span before they need to recharge. So that's one thing. There's also a bit of an issue with the older ones of these big batteries that were using a particular type of chemistry that is a bit of a fire risk if you don't manage it carefully. And we just saw last week an enormous fire at a battery plant here in California that burned for a couple of days, forced some evacuations of homes, closed down a highway for a while. Most new big battery installations don't use that chemistry anymore, in part because of the fire risk. But there are a bunch of those batteries out there, installed out there, and they need to be managed carefully or there will be some fires. Now, you mentioned AI. There are battery developers who are talking to hyperscalers about how they can fit into supplying data centers. But at the end of the day, AI data centers need large amounts of power 24/7, and that's not something batteries are designed to supply, because eventually you always need to recharge the battery.
Hey, you mentioned that fire at Vistra's Moss Landing. It's just outside of San Francisco. I'm wondering, it's about 100 miles south of San Francisco. I'm wondering what that does to perception, especially in a time when we just saw and we're still seeing fires continue to ravage Southern California. what that does to the folks who say, wait a second, I don't necessarily want one of these things so close to where I live. Public opposition, is that an issue?
I think it will be more of an issue in the future. It hasn't been a huge issue up until now. Pretty much any energy infrastructure will face some kind of pushback from the public. Batteries have received far less opposition than even solar plants or wind farms have. And I think in part it's because they really don't look like much and they don't take up that much space, and people tend not to notice them when they're around. But from this point forward, that was a very big, disruptive, dramatic fire there.
Yeah.
From this point forward, I have a feeling you will see more community pushback on these projects, even though the newer projects aren't going to be using the same kind of batteries that caught fire there.
I can't help but feel, though, David, like our next problem is going to be, okay, all these batteries, and when they're no good, like, I don't know how much you can recycle, reuse, but I just do think about kind of the waste that they create, right? That's another problem.
Definitely, and that's something that people do need to focus on from this early point in the industry. They need to be thinking about what happens at the end of the life for these. There are companies out there that are trying to make a good, profitable business out of recycling the metals inside of batteries. Redwood Materials, founded by the longtime chief technology officer from Tesla, J.B. Straubel, they come to mind, but there are others as well. I don't know, however, if we can yet say whether any of those businesses is going to turn out to be a good, stable, solid business in the long run. I think they're all too new for that.
Hey, David, before we let you go, we checked in with you quite a bit over the past few weeks about the ongoing fires in Southern California. One thing that I wanted to ask you about, because you report on power and renewable energy, is the rebuilding process and the idea of burying power lines in some of these sensitive areas that have been burned, that have lost structures, and even burying existing power lines now. Is that something that these areas of California are thinking about doing?
I think that's something that's going to have to be hashed out in a very public process. I mean, the utilities out here in California have been burying more of their power lines over the last couple of years to prevent fires, especially PG&E in Northern California. They've been very gung-ho about this. The main utility in the LA area, once you get outside of LA city limits, is Southern California Edison. And they've been doing some undergrounding, but they're actually much more in favor of installing coated wires above ground. These are simply overhead wires that have a coating on them that make it harder for them to spark in high winds. And they say that's a lot cheaper and faster to do than undergrounding power lines. So I would expect, as we have this discussion about how to rebuild going forward, I'm sure there are going to be a lot of people saying, let's take this opportunity to put those lines underground where they're safer. And you will probably see Edison saying, let's consider the overhead coated ones instead and save some money. I don't know how that discussion's going to pan out, though. I think that's still to be seen over the coming months.
David R. Baker, a Bloomberg News energy reporter, thank you so much. Hey, coming up, everybody, we're going to drive to the close. Our guest, the CEO of Aquinas Wealth Advisors.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks moving higher on this first trading day of the new Trump administration. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shai. That's right. U.S. stocks with the bid from the start today, with the Dow currently up 500 points. S&Ps are higher by 0.9%. NASDAQ gains by 0.7%. The U.S. 10-year yield is at 4.56%. Gold is in the green. Oil is in the red. And Bitcoin, that's higher by 4.4%. Among the main 11 S&P sectors, leaders were utilities and the industrials. Only energy was in the red. And leaders to the upside in the Dow, 3M and Caterpillar, while Apple fell as much as 4.6% and led to the downside. After earnings, Schwab rose 5.6%. And in the tech space, Trump is expected to announce a major investment in AI infrastructure today at 4 o'clock. Oracle jumped 7% as a result, and Facebook is developing a rival to Apple's AirPods. Wrapping things up, Netflix, United Airlines, and Capital One all report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much. We got you covered on those earnings after the bell. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session. You heard from Charlie and Bill Maloney. We've got stocks pretty much hovering near their best levels of the session, so up about 0.8% on the S&P 500, a gain of about 0.2% on the NASDAQ 100, and the Dow, if you're interested, is up more than 1%, so we're talking about a 500-point gain. And we've seen pretty much some broad-based buying into the trade.
Hey, it's everybody's favorite parlor game, Carol Master. How many times is the Fed going to cut rates this year?
Fed's going to do what it's going to do.
Well, traders right now are pricing in about 1.5 rate cuts by the end of the year, yet our next guest says he's expecting 4 rate cuts. We're going to drive to the close now with Chris McMahon, CEO of Aquinas Wealth Advisors and MFA Wealth. Chris joins us here in the Bloomberg Interactive Brokers studio. He's also the author of a new book, Faithful Finances, 6 Steps to Establishing a Catholic Financial Life. Chris, good to see you again. Look at that. 1.5 rate cuts by the end of the year. That's what the folks, the options market is looking at right here. You're saying 4, though. Why?
A couple reasons. I think it's funny, Tim, isn't it? Just last week was it B of A said no rate cuts. They said, look, we're in trouble. The inflation's not reined in. We're gonna have no cuts next year. Then we saw what happened. PPI was cool. CPI was cool last week, right? Then, of course, Goldman came out just the other day and said, look, what did they call it? I think they called it the sweet spot of the economy, where inflation's under control, and also at the same time, the economy's growing. And I think they called for 2, if memory serves. So they called for 2. And we're swinging for the fences. We think there's going to be 4. And one of the big reasons for this, which I don't think we're talking about enough, is kind of all this commercial real estate that's out there cooking, the refinances. There's still $1 trillion of commercial real estate leases that are going to have to be refinanced in 2025. That means that those interest rates have an enormous impact on this. I certainly the Fed might be, a smidge political from time to time, right?
You're saying the Fed is going to do 4 rate cuts to help out the commercial real estate market?
I do. I think that's going to have to. I think Carol, I think at the end of the day, it will be a catastrophe. It'll slow down so much of this mojo we have going now. We're pushed up against new highs in the Dow. If we see some of this really problematic real estate not being refinanced at reasonable rates, I think it's going to be a problem. And I think that's all.
Why should the Fed do that? What are the implications? I mean,
there's lots of implications. That's a great question.
But I mean, why once again should there be kind of a bailout or a very
that's a great question,
or a very helpful move?
I think they would do it absolutely as a bailout. They wouldn't call it a bailout, but I think it's a move to the commercial real estate industry. I think the consequences of not doing it could derail this entire market. We could see markets push down 20% easily, and some of these gains we've made them today.
So
could
take
go
a step back, Chris. So you're saying, we've been talking about concerns about office property, commercial, right? It's the office property, and it's not the top tier. We're talking about the lower tiers. And is this just because of pandemic, people not going back to to the office. It's just as simple as that. Is it's vacant office properties that you really can't repurpose, and so something's got to happen.
Absolutely, Carol. I'm from Pittsburgh. We have a tower there. BNY has a huge tower in Pittsburgh. They're saying it's going to be 30% occupied by the end of the year. 30%, right? And that's just one little city. Cleveland, you saw what happened to those skyscrapers that were sold. That's a huge issue. We see it. And then you factor the fact, Europe's central bank said they were going to do 4 cuts. We don't mimic what Europe does, but I think we're going to be in an environment of decreasing interest rates. And I think inflation has at least taken a pause. It gives them an opportunity to at least do 2, in the beginning of the year, in the first quarter, for sure.
Okay, let's take a step back from rate cuts and talk about the incoming administration. I guess it's not
Although
even
it's
incoming
kind
anymore.
of like linked if you think about it.
It totally
right?
is. I mean, but they only have so much power.
Yes.
You said the Fed sometimes gets political.
Every now and then they do get a little political.
What are some examples of that?
Well, I mean, I think we've seen the interest rates be cut probably at times. Last year, remember we had a big 75 bip basis cut. People are saying, what's going on right now? We're still in an inflationary period. Clearly, that was a sign to get in front of set aside inflation and make consumers confident, right? We see that all the time. And I think we're going to see it more. Consumer debt is still at all-time highs. It's really a problem, right? But I don't worry about the consumer debt nearly as much as I do the commercial real estate. I think that debt could be catastrophic to the economy. And I think,
Wait, is that because of bank exposure?
Yes, I think particularly regional
So then we
bank
shouldn't bring
exposure.
down the capital reserve ratios, should we?
No, we should not.
We should maybe even increase them.
We're worried about regional banks. We think the big banks are going to be okay. The regional banks that hold commercial real estate, we're very worried about what that would do to them, and that's why we see the interest rates coming down. It'll save, in our opinion, the regional banks a great deal of pain, a lot of stress, right?
Wow.
Well, so it's kind of interesting. So I'm thinking about people who are listening. I mean, what I wanted to go back to is that we've been talking about concerns about office properties, and you're saying because this year is when they've got to start making the payments and they've got to either restructure. Okay. If we don't get that, then what happens? Is it a financial crisis akin to the GFC, the Great Financial Crisis?
I don't think so. I think it's going to be nothing like. It's not going to be compared, but it's going to be one. Maybe it'll be 40% of it. It could be dramatic. I think we could have 20, even potentially 25% rundown on all the capital markets, which would be catastrophic, and all that wealth that was created would be wiped out. I think.
But your real concern is the regional bank exposure.
That's
They're
exactly
the ones that
what
are
we're
going to
concerned
feel
about,
it. Go ahead.
I want to talk a little bit about, step back, big picture, and hear more about what you do at Aquinas Wealth Advisors and MFA Wealth, because you're CEO of both of these organizations. I want to focus on Aquinas a little bit, because you write that you believe that good returns and good values are not mutually exclusive. You also have this new book coming out about faith and investing. Talk to us a little bit about how you make investments based on your faith.
It's interesting, Tim. For years, we never did it. They said separate it. Don't ever discuss politics and religion. But what happened was it became so polarized in the boardrooms. Boards became so socially active, much like college boardrooms did previously. And what we found is many of our investors were saying that had more traditional values. They're saying, my goodness, the companies I'm investing in are radically out of alignment with the things I'm concerned about. Our main goal would be to pull these companies back to neutral. That would be our main goal, right? Get back to the old days. Companies make profits, they give them back to shareholders in the form of dividends. Instead of having chairmen of companies, they become really overvalued. They think their opinions are so important to us, which they're not.
But did that hurt returns?
Well, absolutely. I think it did certainly.
What are some examples of companies that went all in on these policies that then didn't have returns as good as you think they could have?
That's a good question. I think there's an issue around investors bailing out on securities that hurt those companies ultimately. And I think when I think about that, there's some companies that have done poorly, and also there's been a little bit of impunity, if you recall correctly, with some of the corporations where they're saying, look, we don't care. This is who we are, for example. That corporate equity index scoring. Are you familiar with that scoring system? Which really, think about that for a second. Just 2 years ago, they were saying unless you adopt our mandates around, DEI and these other types of concerns, even if your company's profitable, if your corporate equity index score is not high enough, we're going to displace you as the chairman of the company. We're going to change the makeup of your board. These companies are being held hostage by these mandates, and I think that really is changing dramatically and very, very quickly as we see it.
I think there's two sides to it, because we also have a story about how a group of about 30 shareholders representing about $266 billion in funds has asked Walmart to explain its decision to retreat on diversity, equity, and inclusion initiatives, especially after years of having consultants, McKinsey and others saying, listen, diversity, it improves performance.
Yeah, it's a great.
Just quickly.
You go right to the point, Carol. Here's the problem. no one's ever going to be satisfied. We should get out of this business altogether. And reverse discrimination is discrimination. It all is discrimination.
Chris, we got to run. Happy New Year. This is
Thanks for having me,
Bloomberg.
guys.
You're listening to Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Business Week. That is Carol Massar. I'm Tim Stenovec. It is Tuesday.
Yeah.
Holiday shortened trading week.
I know.
You and I were here yesterday, though.
We were. And it was kind of interesting. I mean, it was fascinating, actually. I feel like, you know, the ceremonial aspect of an inauguration, and then yet this was a very different inauguration in that it was inside. You don't see that typically. You had several speeches by President Trump, and each had a different feel. One was kind of more typical of his inaugural address, much more stilted, and then kind of playing to some large crowds. And so you got a lot more kind of off the cuff.
You got it all.
We got it all.
You got it all yesterday.
But we're trying to kind of start to piece together, you know, what does it mean in terms of policy? We're getting some indications, but I think there's a lot more.
We did get a few executive orders signed over the last 24 hours.
Did.
One of those included getting federal workers back to the office 5 days a week. It's not just the federal government, Carol. One of our most read stories on the Bloomberg terminal.
Great story. Major League Baseball has ordered its employees to return to the office 5 days a week. This is according to people familiar.
Even in the off season?
Come on. The league has been on a hybrid policy since the pandemic. The change apparently will go into effect in February, according to those in the know. The league believes it operates best with staffers in the office working face-to-face, according to one of the people in the know.
Joins Amazon, AT&T, JP Morgan Chase, and President Donald Trump, who also ordered federal government workers back to their offices.
Are we just stupid thinking that coming after the pandemic, oh, it's going to be so different. It's going to be kind of, loose.
I still think it is different. I think it's different because, yes, you hear from a lot of these big companies, but I know so many people, Carol. I'm like the only one.
That are working from home.
Yeah.
That their life has changed.
Us and doctors. Truly, doctors who have to go in.
2 members of my family were able to move after the pandemic.
Apart from healthcare and essential workers and people who work at the post office.
Yeah. But I have 2 members of my family who are able to move and they're still working from home. They're able to do that. The flexibility. No, actually 3 that still have that flexibility.
I think
Tim is
I'm fuming.
Green with
envy. I am. I'm like,
and we know we can broadcast from home, but it is different.
Not like this though.
No, exactly.
Come on. What would I do if I didn't get to spend 3 hours a day in a tiny room with Carol Massar every single day?
Oh wait, let me pull out Tim's list of all the things he could do if he wasn't here in studio.
I think there is
the
a change,
alphabetical list.
I do think there's, and look, we should talk to Matt Boyle about this, who writes about workplace. I do think there is a change that still happens when it comes to 5 days a week at the office. I think there's a lot more flexibility now.
Yeah.
When it comes to doctor's appointments, picking up kids, taking your kid to the doctor, that sort of thing. Stuff that in the past maybe you had to take a morning off to do.
Do you really feel there's more flexibility?
I do, yeah. My own job changed during the pandemic, so I don't know what it was like here before, but I've found that, my managers here are so flexible with that sort of thing.
I feel like our guys have always been flexible as long as they're like, hey, make sure you're in the studio, make sure you're prepared, and you know what you're doing.
And we do the work, but we are here every day.
Yeah, we are. And sometimes there's flexibility where we're working a little bit at home before we come in and so on and so forth. But I think it's fascinating. I think for companies, it's funny. I have a daughter who's going to, graduate and go into the work environment and I think has some option to be flexible. And I've said to her, you need to be in the office because it's just different. You're getting FaceTime. You're going to hear things, see things. You feel a culture. I just think
how does mentorship
insight.
work if you don't actually ever meet the person who
it's different
professionally you want to be?
I think it's different. I just think understanding a company, you've got to be kind of in it to win it.
Yeah, we'll see how some of the other tech companies respond. We'll see what Amazon does. I wonder also, Carol, we've talked a lot about this over the last 4 years, when there are a lot of jobs open for people, especially in tech, and the talent wars are legit, then you start to see more flexibility, more perks when the job market isn't as good.
Yes, and I also do think for things like some of the tech areas, engineers or computer engineers, I still think that is a tight market, and that is the backbone of a lot of companies, and so you don't want to kind of muck around with that. So you maybe give those individuals some flexibility because you want to hold on to them. You don't want to lose them in an environment. But Major League Baseball. You know what? Back to work or you're out.
Okay.
See what I did there?
I see.
Lame, huh?
No, I like that.
Lame. But Rufel thinks it's good. All right, do not go anywhere. We're over to our TV colleagues, folks. That's because the closing bell starts right now.
Basis as we break down all of today's market action right now with our global simulcast.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele taking you through that closing bell, a global simulcast. It starts right now. The whole gang is here. Scarlet Fu wheeled into the TV studio. Carol Massar and Tim Stenovic in their radio cage as we welcome our audiences across all of our Bloomberg platforms. Carol Massar here on what looks to be a relatively phenomenal Tuesday for U.S. equity markets.
We call it home.
I know, and they don't let you out of it. Did you welcome Scarlet Fu back?
We love having Scarlet Fu.
Oh, yes, Scarlet.
The whole gang is here.
It's been so long.
Was she wheeled in?
I was literally wheeled in, yes, this is true.
Although her foot actually hurts, so that's not actually a funny joke today.
Oh, okay. All right, well, let's talk markets then. S&P 500, guys, most names. For every name that's down, roughly, you've got 4 names to the upside. So definitely a lot more of a broader upside trade today.
All right, I'm looking at Bitcoin because, yes, we did see a fresh record yesterday. The equity markets may have been closed due to the holiday, but ahead of Trump's inauguration, we saw Bitcoin hit 109,000 per Bitcoin. Now it's trading at just around 106,000.
It definitely feels like an everything rally, except for the dollar, which kind of stalled out. But you look at small caps in particular, 10 out of 11 groups are higher. That's kind of the same breakdown for the big caps. The only group that is lagging behind is energy right now.
Yeah, but taking a look at small caps, we're 8 points away from breaking that 50-day moving average. If we see some follow-through buying tomorrow, can we finally get that sort of sustained upside and a new level higher for small caps?
The broader market getting some big help today from NVIDIA, Amazon, Oracle, some of the big heavyweights, so the percentage gainers are definitely in that energy space, material space, as well as some of the industrial names as well. We are awaiting earnings out of a few companies, including Capital One, including Netflix, as well as United Airlines, as we get the closing bells in New York. Up 0.9% on the S&P 500 as Netflix, Carol, crosses the wire.
It does indeed. Netflix, let's go first of all to net paid streaming users in the fourth quarter, 18.91 million. That is a massive beat versus the estimate of 9.18 million. Also, the company getting into the outlook, it sees 2025 revenue, 43.5 billion to 44.5 billion. It had seen 43 to 44 billion. And you do see Netflix shares up about 5.5%, 7% here now in the aftermarket.
I'm looking at shares of United Airlines down about 1% in the after hours as we speak. Fourth quarter adjusted earnings per share did beat estimates, coming in at $3.26. Estimates were for $3.05. Fourth quarter operating revenue coming in at above estimates at $14.7 billion. Fourth quarter available seat miles also coming in above estimates at 78.3 billion. Fourth quarter revenue passenger miles exceeding expectations. Also shares right now just lower by about 0.7%.
I want to go back to Netflix for a bit because of that massive beat on the net paid streaming users in the fourth quarter, double what analysts had anticipated. In addition, revenue, $10.42 billion. That's the outlook for the first quarter, which is a bit shy of what analysts had anticipated, which is $10.48 billion. Nevertheless, you're seeing the stock really jump at the moment, up almost 8%. And Netflix has authorized an additional $15 billion in stock buybacks as well.
Yeah, I mean, it's really hard to find something super negative about this. Remember, this is the last quarter where we're going to be getting those subscription numbers. So it's sort of how do you then benchmark how well Netflix is doing in that revenue number? That'll do it for you on that high end, over $44.5 billion.
But why would you stop reporting your streaming ads if you're going to beat by double?
All right.
Good question. It's a good question.
You guys should take a closer look here at the investor letter here. The company does talk a lot about sort of the metrics that they will be using going forward, but more importantly, this idea of monetization and some of the efforts that they're making to do that. Also saying that they do plan to make a better, their words, push into games. They actually talk about some of the success they had with Squid Game Unleashed and how that could sort of be a template here for some of the other things. And of course, they talk a lot about live events here and the push there. So a company that is becoming a lot more layered in its offerings here, and at least based on what they're saying, they think that is going to be the future of this company. Interactive Brokers earnings are also out at the moment here. And sorry, I'm having a little trouble pulling it up. Here we go. Interactive Brokers is coming out right now. Those shares higher by about 1% here in the after hours trade after EPS did come in just a little bit higher than street estimates. Average customer margin loans also coming in above estimates. Customer accounts also coming in line at about 3.34 million. Net interest income at 807 million. Those shares up 1.2%, Carol.
All right, so let's also get to Massimo. It is, let me just pull it up here. Sorry, we're bouncing around here, guys. They've got a new CEO, and so forgive me, I actually don't have it up on my terminal. So they are announcing a new CEO at the company, so something that we're watching here also in the after hours.
All right, let's go take a look again, maybe at United. I just want to take a look at their guidance here, guys. The first quarter, if you're looking at an earnings beat, they're looking at 75 cents to $1.25 a share. That is a huge beat from what the expectations were. I was taking a look at that first quarter, doing quite well. Remember, Delta really set the bar quite high for United Airlines, and they delivered that fourth quarter profit well ahead of expectations.
I also, too, when we talk about this idea of consumer spending, the health of the economy, we were talking with Katrina Dudley just heading into the close. She was very optimistic, and a lot of that was this idea here that at least in the U.S. here, we continue to fire on all cylinders. GDP is up, consumer spending is up, and corporate fundamentals seem to be supportive of equity valuations, in her words.
Hey, I want to go back to Netflix because this is a blowout quarter, guys. Shares continuing to soar higher after the company reported net subscribers that was more than double what analysts thought they would. And I think it's this mix of programming, at least that's what the company is coming out and saying. I'm old enough to remember, I was talking about this earlier, old enough to remember when Netflix would never do anything live. Netflix would never do sports. Netflix would never do, like, you know, a weekly talk show or something like that. Netflix wasn't even doing comedy specials a few years ago. This company is turning into essentially offering every mix of programming, and it looks like customers are paying for it. They're okay with it. I mean, I was telling Carol, I've never seen a boxing match in my life, but yes, I tuned into the Tyson-Paul match.
And you waited a long time to actually see that main event, too.
It wasn't starting, so I watched it the next day. I stayed off of social media and I watched it the next day.
And it's not just sports, too. I mean, we talk about the live comedy events that they've been doing. I know they had the one with Chris Rock and John Mulaney and a few others, and, of course, the roast of Tom Brady. So this is, you know, not just sort of one thing. They really are experimenting with a lot. I guess the question is more, at least for me, making sure that the costs are under control and sort of developing some of those projects.
And one way they can keep costs under control is to not bid for live sports. They do make the point that they're not focusing on acquiring rights to large regular season sports packages that does not include potentially things like playoff games or games on Christmas Day.
And this gets to the point too, and probably to Tim's point too, is this kind of does this kind of create the stickiness, if you will? Because we talk so much about the churn. Netflix, people will sign up for it just to see whatever binge watch the show, and then they leave. And now they have these various ad tiers, which are designed to keep people sticky. Yeah. And you have all these layered events here, which maybe you just, you know, just kind of pay it and forget it.
Yeah, I do think, look, if you don't want to pay $20 a month for the ad-free version of Netflix, then maybe you say, okay, well, I'll go to that lower tier, you know, the ad-supported tier. I can live with that because they're giving me a little bit of something that I want to watch at least every month.
All right, guys, I just want to get in here. Capital One, that company also reporting as well. So in terms of earnings, it was a beat coming in $3.09 a share. Total deposits also coming in quite strong, $362.71 billion. Net interest margin, though, was a little bit light compared to estimates coming in just above 7%. The net revenue coming in also a little bit light. They did talk about their fourth quarter having steady top-line growth in their domestic car business. They also talk about a return to loan growth in their auto business and stable credit card business. Carol.
Listen, I want to go back to Netflix, right? Because this is a big one, and we're seeing it move big time. Our Lucas Shaw weighing in and saying, talking about this live programming and how vital it is to Netflix as it builds out its advertising business. So we're not going to get the subscriber numbers, right, going forward, but advertising is the way forward. And what's interesting, it says the company shows advertising during football and wrestling to all of its members, not just those on the less expensive advertising supported tier. He also says that in their 12 major markets, the majority of new customers opt for advertising in the 12 markets where it is available. So it just shows that people are, you know, opting into that model, and that looks like that's the way forward when you look at where, you know, kind of revenue growth is going to be going forward. So just kind of interesting stuff. All right, Netflix up about 10% here in the aftermarket. All right, guys, that's a wrap. Across platform radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. Closing bell. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. That is Carol Masser. I'm Tim Stenivek. Netflix shares soaring after they boosted their revenue outlook. Carol, one thing that's kind of surprising to me.
Which part?
Is the first quarter outlook doesn't seem to be affecting the way the stock is moving. First quarter operating income, they're projecting $2.94 billion. Analysts wanted to see $3.13 billion. First quarter operating margin expected to be 28.2%. Analysts wanted to see 29.8%.
Maybe they're looking at the 2022 revenue overall and looking at the big number versus kind of the breakdown.
Even revenue projections coming in light. First quarter EPS coming in light. Investors are shrugging that off.
But they see 2025 revenue maybe a little bit better than what was initially expected. So maybe that's the hope. I don't know. Let's see what Caroline Hyde has to say. She's co-host of Bloomberg Technology, and she joins us now. Caroline, I mean, there's also the buyback in shares, but Netflix just soaring in the aftermarket.
What a way to close out your subscriber numbers, because this is the last time we ever get them. The last quarter of subscriber numbers an absolute blowout, as you say, coming in double where the expectations had been of 18 million. And they've added on net 41 million more people around the world over the course of this year. I mean, this is better than they did during 2020, in the onset of COVID, when we were all suddenly trapped in our homes and had nothing else to do but to switch on and pay for Netflix. Extraordinary numbers. And I think, Carol, what you're saying is really prescient. The fact that they're looking to a full year that still looks so strong, operating margin going to live up to 29%. I hear you, Tim, on the fiscal first quarter, perhaps looking a little bit light. But remember, this is a company that promised us that advertising, which has been slow to bear fruit, isn't actually going to give us a real substantiated financial hit and oomph until 2026. But already you're seeing those dividends. Already you're seeing people pile into the advertising product. And thank you to Jake Paul, to Mike Tyson, to Beyonce, because this is where it's at. It seems to be live programming really winning it for them.
Yeah, I was going to say no boxing matches or Beyonce happening during the pandemic either. So maybe that's one of the big shifts. I do want to bring in Geetha Ranganathan, technology and media analyst for Bloomberg Intelligence. Just to repeat some of these headlines here, Netflix shares are soaring more than 10%. They boosted their 2025 revenue outlook. They added $18.91 million net paid streaming users in the fourth quarter. Estimates were for 9.18, so more than doubling it there. Geetha, you've had about 10 minutes to look at these results. What jumps out to you?
Yeah, everything really, everything what you just pointed out. You know, the one thing that we were worried about coming into this quarter was whether they were going to take down their revenue expectations, just kind of given the strength in the dollar, but they actually boosted that. And, you know, you talked about the live sports being such a big part of this 18.9 million subscriber blowout. And it's going to be interesting to see how they go ahead with both subscriber acquisition and retention. So they do have WWE programming that came on, you know, starting January of this year. And that's a really interesting retention strategy, because you do have that programming kind of come in week in and week out. And so it's going to be interesting to see how they kind of shape the conversation forward. The one big thing that, you know, everybody was kind of looking at, and, you know, we still haven't gotten any inkling about, is the price hikes. So that's, again, another big positive lever that they have to pull sometime through this year, especially kind of given that this is going to be their strongest ever content pipeline year, 2025, with all of their, you know, hit shows returning.
Hey, before we go back to Caroline, I have one question for you, Geetha. I mean, this, you know, the live sports programming, the live programming in general, it's expensive, isn't it? So that's a lot of pressure that, I mean, Netflix really has to make sure that they've got the eyeballs that make it pay off.
It did pay off for them. So let's just take the NFL, for instance. They spent about $75 million per game. We estimate that they brought in well over $100 million just in ad revenue. And then think of all of those additional subscribers that they got. So this is paying off for them big time. So they're making, the content investments are definitely big, but they're pretty disciplined, Carol. And I think the ROI they're going to find is really, really good as well.
Hey, Caroline, to that point, Netflix, certainly the early mover when it comes to this. I think it's fair to say they certainly invented a category here. But since then, you've had companies like Max, Paramount, Peacock from NBC, Universal, all come out with their own streaming products to much less success. Disney, of course, we've got to throw that one in there as well. What is Netflix doing so well that the other companies are not necessarily doing?
Very good point. And leaving the dust, I mean, Geetha's numbers are so stand out when you think about this is a company with 300 million subscribers worldwide, leaving Disney just way behind, less than half of what they've currently been able to crow about. But I think it's just the heady mix of being able to offer you the right content at the right time and the right price format. They're making big inroads into Latin America and into Europe, as well as into the United States, which really surprised me was how strong the US and Canada are in the face of those price hikes. But I think most notably, it is the fact that they keep on delivering, whereas it's Carry On is a great movie that people have flocked to, whether it's these ongoing franchises that people cannot get enough of. Wednesday's coming out with more. We're going to be getting a new Stranger Things. These are people that are locked and loaded on these particular types of content and the genre that they feel so comfortable with. And I wonder, and it's one more for Geetha really, is how much we're going to see cyclical nature of people signing on and signing off when it comes to sports, because that is what is the behest and what has so been the issue for the likes of Warner Brothers and Disney, is that you basically turn on when it's your season and then you switch off again, and you have this huge jump starts in numbers. Are we going to see that consistency when you do have the deals of Raw, for example? P.S. My producer Jackie absolutely loves themselves the new Raw. So it seems as though they're winning on the WWE front.
Geetha, come on in on that. Talk to us about the cyclicality or not nature of sports.
Yeah, no, that's a great point that Caroline brought up. And we've seen that happen every time during football season, right? People just sign up for all these services. And then after the Super Bowl, you have so much of this, what is called churn and burn, right? But that's where I think Netflix is going to do things a little bit differently. So they're going to use a combination of these big splashy events. Think of, Tyson versus Paul, or even the NFL games, where you can go out and acquire all this huge bunch of subscribers. And then you have, consistent weekly programming like WWE. Then the next thing that's really coming up for renewal is UFC, which is, again, year-round programming, which then, forces people to come back week after week to watch their favorite shows. And I think that's how they're going to, they've always kind of strived for this nice mix, whether it's English, non-English content, whether it's licensed original content. And now it's going to be, kind of this live sports, the one-off events versus, that year-round programming.
Geetha, before we let you go, you're an analyst for Bloomberg Intelligence. You cover technology and media. You like having more data rather than less data. Unfortunately, you're going to get less data from Netflix moving forward because they're not going to report this customer metric anymore. What are you going to use to back out that figure? What should we be looking at?
Yeah, definitely. I mean, revenue is how they have been kind of training us. Revenue growth is going to be the big number going forward. It's going to be interesting to see if they give any metrics, Tim, around advertising at all, because we will kind of need that a little bit to see if that ad ARPU number is climbing up or not. But yeah, we're going to have to make some guesstimates in terms of subscriber numbers. But yes, revenue and operating margin, I think those are going to be the major metrics that investors are going to be focused on going forward.
Hey, before we go, Caroline, I did want to get you to weigh in on, we are anticipating an announcement by President Trump on building artificial intelligence infrastructure here in the United States, a big joint venture. We've seen some stocks like Oracle move on it. What do we know, or what might we expect?
It's so interesting, isn't it? Because it was but a few weeks ago that Masayoshi Son was on stage with Trump, congratulating him on his presidential win and promising $100 million into AI infrastructure. And here we get it, $100 million, maybe going up to $500 million with SoftBank, OpenAI, and Oracle. There are so many questions here because what, Oracle is going to be stealing some of Microsoft's lunch here? Because remember, OpenAI tends to depend on Microsoft for its cloud infrastructure at the moment. But we understand from reporting of our own colleagues that there's been some frustration by OpenAI and Microsoft not being able to build out as quickly as they would like and having to go elsewhere for their compute power for their latest large language models. This is exactly what the president now wants to be laying out. Money coming in, particularly from the foreign investment like SoftBank, and committing to building infrastructure here in the United States. And remember, it's going to have the energy that goes alongside it. But big move for Oracle stock, big important cloud growth driver for them, but also really interesting tie-up between SoftBank, which has been taking more and more of a stake in OpenAI by buying up some of their shares on the private market and tender offers coming from employees, and indeed leaving me with questions about Microsoft. But we do anticipate that unveiling at the White House today.
All right, looking forward to that. Great setup for us as we anticipate that. And great analysis from both of you when it comes to Netflix. We are watching the stock continuing to trade, soaring really in the aftermarket, up about 11% as we speak. Our thanks to Caroline Hyde, co-host of Bloomberg Technology, and of course, our Geetha Ranganathan. She is technology and media analyst for Bloomberg Intelligence. We'll all be reading her research later on today and into tomorrow's trade. All right, you are listening and watching Bloomberg Business Week.
Coming up, Christy Akulian, head of iShares Investment Strategy at BlackRock, joins us. That's next on Business Week.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got Netflix shares now higher by 14% after hours. Netflix closed out 2024 with its biggest quarterly subscriber gain in history, benefiting from its first major live sporting events and the return of Squid Game. The company added 18.9 million customers in the fourth quarter, according to a shareholder letter. That was more than double what Wall Street had been expecting, and this was the last quarter, and Netflix will be breaking out subscriber numbers. So what will be the metric going forward? Geetha Raghunathan is a media analyst with Bloomberg Intelligence. She was interviewed moments ago right here on Bloomberg Business Week.
Yeah, we're going to have to make some guesstimates in terms of subscriber numbers. But yes, revenue and operating margin, I think those are going to be the major metrics that investors are going to be focused on going forward.
Geetha Raghunathan with Bloomberg Intelligence. Also reporting earnings after the close of trading today, we heard from United Airlines, and it expects a first quarter profit well ahead of Wall Street's estimates. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move your infrastructure for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies for Oracle Cloud Infrastructure at oracle.com/Bloomberg. Stocks rallied. S&P today up 52, a gain of 0.9%, ending the session at 6,049. The Dow surged 537, up 1.2%. Nasdaq up by 0.6%. The Russell 2000 index up 1.9%. 10-year 4.56%. Gold up 1.3%. 27.42 the ounce, and Bitcoin rallied 3.4%. 105,980 on Bitcoin. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. We are keeping an eye on what's happening at the White House because we do expect President Trump to make an announcement flanked by leaders from tech companies, including Oracle and SoftBank. There's some news there, and we're going to get to that in just a few minutes.
And this has to do with physical infrastructure, right? In terms of the AI build-out. So
they were originally set to talk at 4 p.m. It got pushed to 4:30. But as things happen in D.C., sort of late with every administration, we'll bring it to you when they say.
The president has said, that was just before he took office, he has said that he would pave the way for, quote, people with a lot of money to invest in so-called AI plants to power data centers for artificial intelligence. So we're going to see exactly the particulars on that. We'll get into that in just a moment.
Well, speaking of the president, just a day into his presidency, investors are closely watching further moves from Donald Trump to assess their effect on markets. JP Morgan Chase, for example, is establishing a war room just for this purpose. Exactly how policy proposals will play out is not clear yet. For example, shares of companies with tariff risks largely shrugged off the threats, at least for now, today in response to what was reported yesterday. For an idea, though, of opportunities, we bring in Christy Akulian. She's head of iShares investment strategy over at BlackRock. She joins us from San Francisco. Let's talk themes for this administration, Christy. Where are you bullish?
Yeah, absolutely. And Sam and Carol, thanks for having me. It's great to be here. I think that the broad theme of the investment outlook that we just put out for 2025 is really that we're risk on. So we are overweight U.S. equities. We still see really strong, translation from that strong economic growth that we're seeing all the way down to strong corporate profitability. We're most bullish right now on large caps. We're really preferring to stay up in quality, even though on a day like today, I know we saw small caps pop a lot. Something like QUAL, which is our iShares quality ETF, is where we see the best opportunity because we think that the fundamentals matter just as much, too, as some of the narratives that we're getting. And from a fundamental perspective, we see the strongest earning growth coming from the highest quality companies. So that's the number one area we're bullish right now.
In terms of, Christy's, of course, this is the first full day of President Trump in the White House. We're watching various policies start to come out, or at least indications of ones, and tariffs in particular. I think there are some concerns. We talked with our Gina Martin-Adams earlier of our Bloomberg Intelligence team that tariffs that target economies usually impact companies. So if you target something like Canada, which the president seems to be, indicating or possibly talking about, U.S. auto companies are going to feel it. All of this then ultimately impacts the companies, maybe impacts operating margins. So how do you roll that into your optimistic view?
Yeah, I mean, our optimistic view is certainly not without risk. So we're certainly focusing on trade policy as one source of unknowns, immigration policy as another, and then potential for deregulation. So I think it's a little bit of a mixed bag in terms of the direction that can have of economic growth. If we look at kind of back to the macro here, we're focused on fundamentals, even though the headlines are going to move us around quite a bit this year. What we've seen in terms of inflation looks benign, right? We got CPI data last week. That was the lowest core reading month over month since July. The path that the economy is on right now feels good. So that underpins a lot of our bullish outlook. But the risks in terms of how those policy changes might be implemented are worth watching this year. So I think that you brought up tariff policy. Trade policy is obviously incredibly important. If that does reignite or reaccelerate immigration, then we think that there's some portfolio adjustments that you might need to make. We're talking about some thematic exposures right now, something like MADE, great ticker for MADE in the USA, that really focuses on domestic manufacturing if we do see those widespread tariffs put into place, or something like technology independence. I think both of those thematic ideas have a place in a portfolio, especially if you're concerned about, trade policy, even though maybe what we saw from President Trump yesterday was a little bit more benign than markets were anticipating. So I think we did see a bit of a relief rally that the tariff potential was not quite as high as investors maybe had thought, and maybe what was priced into markets coming in.
It's early yet, though.
It's still early. Yeah.
Okay, so what about when it comes to international? Obviously, you're bullish on U.S. That's not a contrarian position right now. We hear, I've lost track of the number of times, Carol, I've heard people talk about U.S. exceptionalism in recent months. It's certainly a theme for the year. International equities, though, they are less expensive relative to their U.S. counterparts. What's the opportunity there?
Yeah, absolutely. So we think that you need international exposure in your portfolio for diversification. They're just different sources of risk and return, and that is important, especially to your point in this environment where we're overweight and we're enthusiastic about the opportunity set in the U.S., but so is everyone else. So I think that the benefit you get from adding to international is those lower valuations. In terms of the way that we think it's sort of best expressed right now, again, kind of leaning into that quality notion, but internationally, we like international dividend payers. So companies, that screen a little bit higher quality, that can pay that dividend and a steady dividend over time. We also think it's an opportunity for active management because it is a environment that is changing quickly and on a path of global divergence in terms of global growth. I think you need to have sort of high conviction in some of the areas of opportunity that you see. So we do like international, even though we're overweight the U.S., but I think the best opportunity there leans in screening a little bit higher quality, and dividends is an interesting way to do that. Something like BIDD, which is our active international dividend fund that we just launched. I think that's going to be a really interesting one for this year.
Christy, you get to see, right, the big picture, right, in terms of what's going on in the ETF industry, and specifically in terms of BlackRock flows. I mean, the ETF industry saw a record flow of about $1 trillion into ETFs in 2024. What are you seeing in terms of flow so far here in 2025? Where is the money going? Where's the money maybe flowing out of?
Yeah, absolutely. So to your point, the first $1 trillion year for U.S. ETFs, which is just a huge milestone. So I think that's really interesting. A big part of that was driven by newer asset classes and newer exposures. So obviously, cryptocurrencies and spot Bitcoin ETFs that were launched last January, just about a year ago, took up a lot of the attention and took up a lot of the flows. But I also think that, what we're seeing right now in this environment that is overall strong but not without risks, we're seeing investors lean into some more niche areas of the market, something like outcome products and outcome ETFs. I think that's an area of focus where we've seen some flows. We tend to see flows follow performance. You certainly saw that in the last quarter of 2024 and Q3 as well in terms of small cap. You saw large inflows to small cap. Some of that has reversed, and we've seen that continue to reverse a little bit more. It really is underscored by our preference for being up in quality and large cap, that we think the fundamentals can catch up to some of those smaller cap names where we're seeing investors maybe get out of or take profits.
When you talk about outcome ETFs, just to clarify for those who may not be in the know, that's when you kind of use options, right, to achieve various goals?
Yeah, absolutely. So, we have different forms of buffered products. I think is probably the most popular there. So whether you want to, protect yourself to the downside of a 5, a 10, or 20% drawdown, being able to use options to be able to trade away some of your upside potential in exchange for really locking in more certainty of outcome on the downside. I think that's been a really interesting conversation with investors, especially in this world where we're not seeing the same diversification benefits from bonds. So if you love equities and you're overweight equities, which, we are right now, but at the same time, you're not getting that same ballast or diversification from longer term bonds, how are you constructing a portfolio that can weather a variety of different environments? And I think those outcomes, that having that certainty of outcome has been really important for investors too.
Christy, how should people think about overlap with the S&P 500 in an ETF with the USA Quality Factor ETF? The QUAL is the ticker. Because if I look at the holdings there, Apple's the biggest holding. You got Microsoft, NVIDIA, Visa, MasterCard, Meta Platforms, Eli Lilly, Alphabet, United Health, TJX companies. How should investors think about that compared to just buying an index fund with the S&P 500?
Yeah, a couple different things. I think quality is as much about what you don't own as what you do. So qual is a little bit more concentrated, and you're going to see some similar exposures to just the broad-based index, but they're held at different weights, and they're really screening out some of those lower quality companies. So I think that's the important thing. The other thing too, though, is just when you look at an ETF, it's really important to know what you own. The way that we construct our factor ETFs, so quality is one of them, is sector constrained. So it's giving you a representative slice of the market. It's not just giving you an entirely technology fund because technology stocks screen high quality. Really importantly, it's giving you the highest quality companies within each sector. So I think knowing whether it's a substitute for an S&P 500, augmenting it is important. And the way that it is constructed is meant to be sort of a core holding.
Christy, just got about a minute left here. A story that we've been looking at in the ETF world, Raymond James Financial entering the ETF market through its asset manager division. They have a vast network of financial advisors who up to this point were probably offering things like BlackRock ETFs. We are increasingly seeing others get into the ETF industry, and especially those with their own financial advisor network. More competition, does that make it a little bit tougher for you guys?
I mean, I think the general trend that we saw in terms of the $1 trillion of flows just means that the overall pie is getting bigger. So, competition is not bad. We lean a lot into our reputation and brand and the really full suite of product offerings that we have. So really feeling very confident about ETF flows this year as well.
All right, cool stuff. Great overview. Christy Akulian, she's head of iShares investment strategy at BlackRock, joining us on this Tuesday from San Francisco.
Hey, coming up, we, of course, are monitoring what's happening at the White House when it comes to the big infrastructure announcement that we expect. When we do hear the president making comments, we'll bring you those comments. Also, speaking of leadership, we've got Adam Galinsky joining us from Columbia Business School. He's the author of a new book, Inspire, The Universal Path for Leading Yourself and Others.
Got a lot of questions for him about leadership, maybe some of the leaders that are out there, what he thinks. That's next on Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg, keeping an eye on Netflix shares after hours. Netflix stock now up by 13.5% in the extended session. Netflix closed out 2024 with its biggest quarterly subscriber gain in history, benefiting from its first major live sporting events and the return of Squid Game. Again, after hours, stock up almost 14%. The company added 18.9 million customers in the fourth quarter. That was more than double what Wall Street had been expecting. First trading day of the Trump administration, with the S&P up 52, ending the session at 6,049, up 0.9%. The Dow today up 537, up 1.2%. The Nasdaq Composite Index was up by 0.6%. 10-year 4.57%, with a 2-year 4.27%. Spot gold up 1.3%, now at $27.43 the ounce. West Texas Intermediate crude down 2.6%, and Bitcoin today up 3.9%, 106,485 on Bitcoin. As for the market backdrop in the Federal Reserve, Chris McMahon is the CEO of Aquinas Wealth Advisors and MFA Wealth, and right here on Bloomberg Business Week, he told us he sees 4 rate cuts this year because of ongoing bank issues.
We're worried about regional banks. We think the big banks are going to be okay. The regional banks that hold commercial real estate, we're very worried about what that would do to them, and that's why we see the interest rates coming down. It'll save, in our opinion, the regional banks a great deal of pain, a lot of stress.
Chris McMahon of Aquinas Wealth Advisors. Again, recapping, S&P up 52, up 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. Well, today's probably a pretty good day. It was as good a day as ever to talk about leadership. We saw here in the U.S. this week the inauguration of a new president and administration. Carol, you and I, 24 hours ago, were covering that. We're still covering the president's first full day. We do wait to hear from him as he plans to speak with tech executives to make a big infrastructure announcement at the White House. We'll bring you those comments as we do get them. Leadership, though, and different types of leaders, and what makes a good leader, is Adam Galinsky's world. He's a Paul Colello Professor of Leadership and Ethics at Columbia Business School. He's got a brand new book out, Inspire, The Universal Path for Leading Yourself and Others. Professor Galinsky joins us here in the Bloomberg Interactive Brokers studio. Before we get into what you write about this inspiring, infuriating continuum, the different types of leaders that are out there, I want to hear from you how this book came together, because you essentially created a class at Columbia Business School that every person who goes to Columbia is required to take.
Yeah, so I've been studying leadership and teaching leadership since 2002. Originally, I was at the Kellogg School of Management, taught at Berkeley, and then at Columbia. And around 2006, I was actually teaching the FBI, the Federal Bureau of Investigation. We had a program at Kellogg for agents to come in, about 60 agents at a time. And one of them just started talking about a leader that inspired them. And I was really struck immediately by the transformation in physical transformation. His eyes lit up, right? He almost looked, smiled. He got expressive. His voice spoke really quickly with a little higher pitch. And it was clearly that he had been fundamentally affected and impacted by this leader. Then the next year, a different FBI agent, ironically enough, started saying, I don't want to talk about an inspiring person. I want to tell you about all the infuriating leaders I had. And then, so I started asking hundreds and thousands and probably tens of thousands of people across the globe a very simple question. Tell me about a leader that inspired you, and tell me about a leader that infuriated you. And notice both types of leaders transform you inside, right? One is like a wellspring, the other is, a seething cauldron. And one of the things I realized really quickly is that they're basically mirror images of each other. So the inspiring leader, right, has that optimistic big vision. The infuriating leader is a pessimist, pedantic, right? The inspiring leader is courageous, infuriating leader is cowardly. Inspiring leader elevates people, infuriating leader diminishes people. And so you can start to understand that this happened. The second really fascinating thing about this research is I started asking people all over the world. So every continent that you can think of, dozens of countries. And what I discovered was there wasn't a single inspiring or infuriating characteristic that wasn't mentioned in every single country in the world. So there's something universal in the very tapestry and fabric of the human mind that really captures this.
Anything between men and women differences?
I have not found any. It's a great question. That's another one, which is that women find courageous, big picture, generous people inspiring, and so do men. And it doesn't really vary that much it doesn't vary by gender, by ethnicity, by country, by culture. There's something really fundamental about that. I think there's some variation sometimes in, like, you can see Democrats and Republicans, right, where Democrats put a little bit more emphasis, let's say, on the empathy side, and Republicans might put a little bit more emphasis on the strength side of the equation.
Well, to that point, and I want to jump right into it, because we do want to go over some leaders at a certain point, and whether they're inspiring or infuriating. But I think to myself, here you are telling us about these different leadership qualities or the way that people view leaders that they've encountered in their lives. I think of somebody who's top of mind, President Trump. To many people, to more than 70 million voters, he's an inspiring leader. To many people who didn't vote for him, and even some people who worked in previous administrations, in his previous administration, he's not. He's an infuriating leader. How can one single person be both of those things to different people?
So I'll say three things about that. The first is that one of the things that I think my research has discovered is that there's these three universal factors, and I'll sort of go through them talking about Trump in a second, but it also tells us something fundamental. We're not inspiring, infuriating, born that way, and we're not forever that way. We can be inspiring today and infuriating tomorrow, and we can be inspiring in some dimensions and infuriating in other dimensions. So in some ways you could say all of us, every one of us is both inspiring and infuriating, or has the potential to be both at different times, right? And so I think that's one thing. The second thing I would say is that there's two things about Trump that I think everyone would agree with. One is that he has a simple, compelling, visual vision that everyone can understand, right? Make America Great Again. It's even an acronym, right? And the second thing is that no one will contend with the fact that he presents himself as a strong and courageous protector. And two is that he comes across as authentically passionate. And so those two are to the fundamental of like how we are in the world, this exemplar thing. And so he has this very clear vision, and he is very clear, presents himself as this strong, courageous, passionate, protector. Now, where he falls on the infuriating side is, I think, two things. Some people find the vision itself to be infuriating, like exclusionary. It only includes a certain category of Americans, for example, and find it to be maybe harsh. And then the second thing is, I don't think any person would argue with the fact that so the three universal factors are being visionary, how we see the world, being exemplar, how we are in the world, and then the final one is mentor, how we treat people in the world. And I don't think anyone would argue with the fact that Trump doesn't treat people very well. Right, he had more turnover in his first term than any other president in terms of the main leaders within his administration. He is notorious, right, for throwing people under the bus, right? And when I ask people around the world, describe an inspiring leader, it's always someone who shares success, but takes on blame and burden. But with Trump, right, he forever steals success. It's me when things go well, and it's you when it goes bad.
Well, and yet, step back for a second, and whether he took accountability for this or said that, some of the policies that he implemented or had people implement, whether it's tariffs on China, many would say this was long in coming. Like, there are certain things he's done that actually people applaud him for, right? And those tariffs with China and pushback on China carried over to the Biden administration. Now we're like getting ready for kind of what comes next. But I'm just saying that, is it only inspiring leaders that actually get some stuff done? Is it infuriating leaders also? And, or leaders that maybe, people don't want to be around, that still bring about some changes?
Absolutely. I mean, I think if you look at some of the most famous leaders in our world, for example, Steve Jobs, right? Even in some ways, Elon Musk, right? That they fit that mold of being sort of, very clear vision, authentic and passionate, but not always treating people very well, right? And so those people might be great top of the top leaders, but they wouldn't be very good managers, for example, and I think that really makes a difference. One thing I'll say about Trump, though, is that the things that he's concerned with, he's very good at recognizing what other people's concerns and fears are, right? And so he's able then to package those in a way, like, I think everyone would agree we need to have a very clear immigration policy to have an effective United States. Now, we may disagree with some of those elements, but he's very good at simplifying it, right? Like, we need to shut our border down, to figure out what's going on, and we could maybe then sensibly reopen it at a later point. And I think you see that. The trans issue is another one that he really expertly understood, which is that people are concerned about fairness in athletics. They're concerned about, could someone show up in a bathroom that would make me, could a man show up in a woman's bathroom, using this issue as a ruse? And so he understood people's fears around that and was able to articulate them well.
What do you think corporate leaders need to do going forward? Because often they'll have their employees say, listen, I'm uncomfortable. I don't think of our, employee base as male or female. I think there's other choices. Yep. What do you think how this is going to play out in corporate America?
I mean, that's a great question. I mean, I'll say, the first thing I'll say is I do think that one of the reasons why Kamala Harris lost the election was two things that are around vision. She never articulated the true state of the economy, which was that it was much better than
it's the economy's stupid, right? Like there's a reason why people say that.
She didn't defend it. She didn't come out and say, yeah, prices are higher than they should be, but she should have said every single day about job growth. That's what Trump would have done, right? Every single day. And the second thing is she never articulated at any point what her vision around, let's say, gender identity was. Like, I have no idea. Like, I know that she generally supports the rights, but like, are there limits to that? Like, what is the fabric of that? Like, Trump was very clear. And when you look at some of the exit polling, you see two things. People had accurate information on the economy, voted for Biden, and they voted for Trump if they didn't. And if they're concerned about the trans issue, they voted for Trump. And so I think those are two things. Now, what should corporate leaders...
Well, I was just going to say, we have plenty of time, at least until we start to hear from the president, and we are awaiting that at the White House. I do want to ask, because your book, it's not just about leaders on the international stage and leaders in the boardroom. I mean, you talk about parenting and being a leader in the home. What are some takeaways that people who are not necessarily in managerial positions right now can take from the book?
Yeah, well, I coined a phrase that I use in the book called the leader amplification effect. And the leader amplification effect is that when you're a leader, you're essentially on stage, eyes are on you. And one of the things we know from cognitive psychology, and I know you've had a lot of cognitive psychologists on this show, is that attention amplifies signals. So, and then those also intensify reactions. So when you're on stage, your signals, whatever, they could be verbal, nonverbal, good, bad, small, big, are going to get amplified, and then people's reactions are going to be intensified. And so what is a leader? Well, a leader is someone who has power and status. Those are two of the things I've studied the most in my career, social hierarchy for 20 years. And essentially, it's someone with some authority, right? And also people look up to that person. That's what parents are. Right, parents they have authority over their kids, and their kids generally look up to them, or at least look to them for information. And so I've coined a phrase that I call the parent amplification effect, a corollary of the leadership, which is like they pick up on things. I'll tell you a very short story about this that I really love, about a former doctoral student at Columbia who worked with some people you've had on, like Sandra Matz. But when she was 12 years old, she overheard her mom say to someone else, both girls are great at piano, but I can't remember right now. Her sister's name, has a real knack for it. Abby, I think, was her sister. Abby has a real knack for it. And she was so incensed, she never played piano again. She was like, basically, F you, Mom. You think she's got better things? And, I saw her mom, and this is what's great about the leader amplification effect, is that we can be totally unaware that we're having this impact. And I told her mom the story. She's like, I had no idea why she quit piano. Like, that happened like 20 years earlier. And Barry Salzberg, he was CEO of Global Deloitte, about 6 months after being CEO, he noticed there was bananas at every meeting. He's like, like, is bananas an important symbol of Deloitte? That I've been here 30 years, or like someone else.
Did he bring a banana to a meeting?
No. What happened was his first meeting he went to, he picked up a banana with a little bit of enthusiasm, and the executive assistant was like, have bananas at every meeting Barry's at. He didn't even say anything, right? And so, whether it's you're a parent, whether it's, and that's why I always say it's not about a position of leadership. It's like, whenever you matter to someone else, right? It could be a spouse, it could be in a dating relationship. When you care about the opinion of another person,
right,
all of their expressions are because you're paying attention, right? And attention's really that currency.
Well, with kids, I think about that a lot. We've talked about this, how kids can be branded as, well, you're a math kid, or you're really not a math kid. And they just kind of get it in their head and kind of go that route. We want to ask you about a couple different leaders. You have mentioned Elon Musk. You know, it's interesting. We're just coming off the inauguration. We saw these big tech CEOs, so they're kind of top of mind for me. When you think of Elon, when you think of Jeff Bezos, Mark Zuckerberg, Sundar Pichai of Alphabet, I don't know, inspiring leaders, infuriating leaders?
I mean, I think they can be a little bit of both, right? And some of them, clearly, one of the things that we are inspired by is people who do amazing things, right? Like, think of Steph Curry. Like, how many people are, Steph Curry is my favorite player, right? He can just do things that no one else can do. Josh Allen on the football field, right, is the same way. And so, people who create things are always going to hold, a big attention in the world, and that's true throughout history of the United States. You go back to, some of the famous people in the 1800s, and so I think that there's a way that we really get captivated by that vision and that super competence, but also they can start veering off into the wrong vision, right? And they can also start not really paying attention to other people. So one of the problems of the leader amplification effect is sometimes we aren't aware of the impact, right? That's exactly what happened with Erica's mother. She had no idea this offhand comment would have that impact. And so,
So those employee surveys about your bosses are really good.
Yeah, I mean, I think they're really good. I think so. I'm a huge fan of 360 feedback, right? And I think it's, I created I actually created a thing called, an am I inspiring scale that people can sort of measure, but the best way to use it is to take it yourself and then have other people take it. And then you can say, I might think I'm visionary, but they don't see me as visionary. And that's that's what we want, is we want accurate understanding of how other people perceive us.
So I'm thinking about other leaders out there who are in our world. We talked about Elon Musk. We talked about some of the other tech leaders. We just celebrated the life of Jimmy Carter. And a lot of people, in remembering Jimmy Carter, talked about how he had these qualities that, really inspired people around him. But he was an ineffective president because he was a micromanager and he didn't play the politics game. How do you balance, where do you balance on this continuum to be effective?
Yeah, I think that's right. I think, well, if we just go, the last chapter of the book talks about actually the connection between Jimmy Carter and Donald Trump. They both lost re-election, and fortunately I was able to get in a couple of paragraphs about Donald Trump becoming president again, after that. But they lost because I think different parts of what I call the Venn diagram of inspiring leadership: visionary, exemplar, and mentor. Jimmy Carter was clearly, he was deficient on the visionary end, right? He never articulated a clear vision for his presidency. And there's an amazing quote by, I can't remember exactly who it was, but it was about even cabinet secretaries need a vision in order to execute within their departments. And Jimmy Carter never gave them that vision, so they couldn't execute effectively. And the micromanagement, the famous story of Jimmy Carter approving the tennis schedule, everything, it's unclear whether it's actually true or what role he played, but it fit the image of who he was, which was someone who was lost in the weeds, a micromanager, couldn't see the thing. But all those other qualities, right? His courage, his calmness, his humanity, those shone brightly outside of the Oval Office. And so in many ways, right, his entire image was rehabilitated in that process.